What's up? What's up, everyone? Welcome back to another DePIN Happy Hour here with the crew. Man, so much to talk about this week, guys. So much to talk about. I just feel like this week feels like a month. Honestly, it's been a month. It feels like we had a lot happen. 375 today. I think that's big news, right? 375 had their airdrop checker go live. So definitely check that out if you have not checked that out already. I'd highly recommend. But how are we all doing, guys? Besides all that, how we doing this week, man? It's been massive.
Bruh, it's been like a freaking water hose week, man. There's so much happening right now, not just in DePIN, but in general. I am looking at my timeline on Twitter. It's like I think a lot of people are just exhausted and getting burnt out right now. Honestly, like there's so many people that are just like giving up, and to me, that's almost like a bottom signal in some ways. Like when people are max pain and just like leaving crypto altogether. I can't remember a time seeing it like this since really the FTX fallout, to be honest.
Yeah, I definitely feel that's that energy. I mean, we had those massive liquidations last week, and kind of continuing into this week. I feel like just like lots of choppiness, lots of downturn in the market, lots of hecticness, and I just feel like people are just sick of it. They're tired. They're really exhausted. We have Bobby asking if Quez is eating. I believe he is. He's doing some 375 stuff right now. He's falling behind, but he will be here probably in about like 40 minutes or so. He's supposed to be coming, Bobby. He's coming. He's going to eat with all of us.
Well, you have so many people that are influential in the space that are just posting like, "Hey, I'm taking a break." They're just tired. Their bags have taken a hit. They've been optimistic for months and months and months, and still we haven't seen the bottom quite. Like Dark Virus just posted. That guy's a machine. It was just like, "Hey guys, I'm taking a break," basically. Anyway, you know what they say? Blood's in the buy when there's blood in the streets. I think
Buffett mode. Buffett mode, as Dylan puts it.
Yeah,
So,
you know what I'm seeing is like a break between the TA people that are saying the market cycle's over and just going off what's in the charts, the 4-year market cycle, and the macro people that are saying, looking at the business cycle, looking at the liquidity cycle, and from a global perspective. So there's like a very much a break right now between the two, and it's going to be interesting to see how it plays out really over the next couple months through the end of this year, to see how it plays out. Because I think there's plenty of reasons to think that we could have a resurgence here, but you never know what Trump's going to tweet. Honestly, like
he's going to tweet that you don't know shit about crypto.
I want to play that. I want to play that to start this off now. Actually, holy shit! Oh, that's so great. I'm so happy you said that today. Oh man,
that's what should have been a bet on Polymarket or one of the other betting sites, because my God.
Yeah, just look at this Giga Chad, guys. I found it right here. Here we go. Look at this. Can you guys hear this?
Well, you don't know much about crypto. You know nothing about nothing. You fake news. Well, you don't know much about crypto.
Oh my God.
Oh my
You don't
gosh.
know much about crypto. You don't know much about nothing, you fake news.
That is just epic. Golly.
Well, I didn't see the stream, so I have no idea what the context for that even was. What did they ask?
They asked about CZ. So there was a reporter that said, "Oh, why'd you pardon the? What was the reasoning behind pardoning CZ from Binance, the Binance CEO?"
And then he went on to basically say, like, I don't really know much about it, and I've never met him, but other people told me to pardon him, so I did.
That's exactly what he said.
That's like essentially what he said.
That sounds like something Trump would say.
Yeah, he's like, I don't really know much about him, but a lot of people say he shouldn't be in jail. He's not a bad guy, so I said sure.
and now there's talks about SBF, and it's kind of interesting. You notice, like 2 weeks ago, SBF came out and started basically trying to expose the Dems, and I'm like, exactly what he's doing. He's playing into Trump's hand. Trump's going to love that.
Oh yeah.
I mean, it's very obvious how he's trying to play this. So we'll see what happens there, man.
He just watches the videos from SBF, and he's like, "What a great guy! This is the best guy. Why is he in jail?"
It's exactly how he's trying to play it out. I mean, SBF obviously knows how to play it. I don't know. We'll see. The SBF meme coin. I was showing Tyler earlier. It started pumping when CZ got pardoned. I think people are speculating on Sam Bankman now, so we'll see.
What's the SBF meme coin?
Well, when he tweeted, remember, like he got a hold of a phone or something in jail and tweeted from his X account, like maybe a month ago. As soon as that tweet went out, like about an hour later, the SBF meme coin went like crazy. It went from like $100,000 market cap to like 2 million to like a 20x in the evening. And it pumped again today. So it was created like earlier this year.
Jesus. Well, and what's it called again? What's the ticker?
Brad and I were having a conversation. We were chatting about something, and somehow we got on the conversation about SBF tweeting, and then 10 minutes later, Brad's like, "Hang on a second, I think there's an SBF meme coin that is going to be running," and it ran.
It certainly did.
Oh my god, I'm looking at it right now.
Brad's
what?
Like trading and driving at the same
355,000 market cap. It was 248. So doubled today just on the CZ news. Dude, if he gets pardoned, you better ape into that. It's gonna freaking go parabolic. You can get it like easy, like 10 to 20x probably. Honestly.
Yeah. That's so sad. It's just so sad.
We gotta win somewhere.
Yeah, Jesus.
Yeah.
I think we're all gonna eat, honestly. How are your guys' allocations? I didn't see your screenshot in the chat.
Oh, 375?
Yeah.
Yeah,
nice.
I'm right around the same range as you guys. So
Yeah,
I think we're all probably in the same range.
And
are you guys gonna lock up?
Oh, I'm locking up.
Yeah.
I'm locking
up
up
too.
12 months.
Okay.
Yeah.
I
don't think there's a reason not to.
Yeah, I think like my key reasoning was one. I had two reasons. So one, I really like the project. I think it's going to go a long way. But two, I just think that if we're looking at market dynamics, if next year is supposed to be a horrible bear market, I'm fine with holding this thing for longer than a year. It's like I don't know, like that's my logic. I was like, oh well, if it's going to go down anyway, I might as well just hold on to it and boost my rewards. So
I'm curious, like, what do you guys think about 2026 right now? I've been thinking about this a lot.
I think
it's in 2 months. That's what I know. That's all I know about 2026.
Honestly, with the way things are going, with just tensions rising, like economic tensions rising, I feel it when I walk out. I go out to like the store, I go out to the bar or whatever. I see it. Like people are struggling, man. I just think that it's going to be a rough year initially, followed by just like either a massive Fed rescue mission or just gradual easing out of it. Either we get a V-shaped recovery or it's like a wide V-shape, like we just like stair step a little bit further out. But that's what I think.
Yeah,
I'm always pessimistic, but one thing I do know is that the DePIN model for the way I play the market is just accrual. It's you invest in infrastructure and it accrues value, accrues tokens. So I'm never too worried because I just know that if it's based on a fiat amount converted into tokens. Hold on, Finny. I got my little one over here.
Hey,
my arm hurt.
Your arm
hurt?
Oh, no.
What did you do? The shirt.
It's the bear market. It's getting him.
Is it better if you want a different shirt? Okay, we ask Nona to get you a different shirt. Anyway, but the bottom line, I just accrue. Whenever the market's down, I just accrue and wait to sell at a better price. And if it's a fiat amount converted into token, I get more tokens, which is just better for me in the long run. So I'm never too worried about it. That's a nice for a DePIN versus buying a token and worrying about it depreciating. I can just accrue tokens at a low value and wait for them to increase.
See, I actually don't agree, Jay Soto. This does not feel like an extended bull run. This feels like the most pessimistic bull run I've ever been in my life, where everyone's just like upset, and the S&P has been hitting all-time highs like nonstop the past several months. Everyone's like, "Dude, I'm so tired. Like, what the hell? This market sucks."
It's because like 60% of the country is broke, and everyone's sitting in altcoins.
Yeah,
like like Bitcoin's gone parabolic, but then most of the people in the space are sitting on alts, so they're fucking getting wrecked. That's why.
Yeah, that's very true. Most people in the DePIN space are sitting on alts; they're not really stacking.
And crypto Twitter in general. I mean, like how many like Bitcoin maxis are sitting on Twitter posting all day? They're not. Really.
They got lives. They have lives outside of Bitcoin.
Well, all the traders, like they're going to stack and bet and use the market and use perps and do all that, but all the altcoin guys
Not
are waiting
anymore.
for the 10x. Not anymore. Yeah, they're just waiting for the up cycle.
Nate says we haven't seen the bull run yet.
So okay, on that point, Nate, I saw this graph that was basically initially it was a conversation about the 4-year cycle versus we're not really following the 4-year cycle, we're following the business cycle, and then like on a business cycle adjusted basis, the current price of Bitcoin is still at 30 or so % of where it would be given, or where it could go, I guess. I'll have to find the context of that, but it was an interesting graphic to potentially suggest that we are in the making for higher and higher prices. But
we see. Go ahead.
Oh no, go ahead.
I was going to say we're seeing projects now using this as an opportunity to change some of their tokenomics and some of their policies and stuff. Like Helium just completely removed mapping rewards from Helium mobile accounts. That dropped earlier today, and we're seeing the fallout from that as people are complaining. They're like, well, I was getting rewards and now I'm getting no rewards, and they're freaking out. But you got to do what you got to do. Eventually, you have to have some sort of upward pressure on your token in order to just stay afloat as a company.
Yeah. There was another interesting point that I was going to bring up, which I was looking at the MetaDAO Launchpad. And so, kind of just taking a look at some of the ICOs that are coming back, which I think is funny that ICOs are becoming a thing again. But there was a project yesterday that had raised, they set the cap at $2.5 million. I think they raised $76 million in their ICO. So like 97% of it got redistributed or refunded back to the customers because it had so significantly oversubscribed. But I was looking at the other projects that have been doing their ICOs on MetaDAO, for example, and they have all sold out pretty much at least a 2x, if not more, over and above the cap that they had tried to raise. So we are in this interesting situation where we've got alts that aren't probably performing the way that everybody would like to see them, but there's still a ton of capital flowing around, and it's just like, where's that capital going?
Yeah. I mean, alts are like the most oversold we've, I think, ever seen right now. It's actually crazy. I think about 2026 though. Like two things I keep thinking about, like Jerome Powell's going to be out in May. They're going to put somebody in there that's going to just do whatever Trump wants and cut rates. And then midterms are coming up.
Yeah.
Like there's no fucking way they're gonna allow the market to tank going into the midterms. Like they're gonna do whatever it takes, in my opinion, to pump shit. Like
I don't think the problem is the market pumping. I think it's all the KPIs under the hood on the economic front that are the problem. Like what's inflation, what's non-inflation, what are the real job numbers versus like what we're being told. I think those are the underlying factors that I don't think they can turn the ship around in 6 months. But I think we'll keep seeing asset prices push.
Yeah, they don't have to fix the economy because like as much as shitty to say, but like I think 60% of the country has been in a recession now for the better part of 2 to 3 years.
Yeah,
the markets are up because the top 10% own like 88% of the stock market. So like they can keep printing money, which is going to lead to inflation to prop up assets. It's horrible for the vast majority of the country, but it's going to keep the markets up. And $7 trillion in money markets. That's the other thing. Yeah, there's over $7 trillion in money markets. As rates continue to get cut, that yield, as that drops, people are going to start looking for a better return soon. So there's $7 trillion sitting in money markets. You've got the 401ks now. They're going to be opened up to crypto. I was looking at that. I want to say it's like, was it $14 trillion in 401ks? When you add investment retirement accounts, it's like over $40 trillion that is now going to have access to crypto. Yeah. So there's certainly a lot of money that can come in. And then Brian Armstrong today said that they're like 90% of the way of getting the market structure real fast.
Right.
So there's certainly a lot of catalysts. And then JP Morgan came out today and said they expect next week in the FOMC meeting that Jerome Powell is going to talk about ending QT and starting QE early, versus in like December where a lot of people were thinking it was going to happen. There's JP Morgan thinks it's going to happen next week. So we'll see, man. I think there's still an argument to be made. Now the charts aren't showing it quite yet, but I think a lot of people are doing TA are saying if we can get if Bitcoin can break above 117 again, we're back up in an uptrend. And then Ethereum. Tyler, I sent you that thing about Ethereum and the Russell 2000.
Yep.
So it's pretty wild, actually. Let me see if I can pull this up. This is from Sistine Research, and there's always been a really strong correlation. The Russell 2000 is like small and medium and mid caps in the stock market, and that tends to do better when people are risk on. So if you go into a quantitative easing environment, that's when the Russell 2000 does well, and it's starting to hit all-time highs right now. So that would lead you to believe that like people are getting more risk on right now. But the Russell 2000 versus the S&P is really the thing to be paying attention to. And if I can find this chart, it's been in a downtrend since 2021. It was the last time we saw an alt season. And we're starting to break out. Here it is. Let me see if I can share this. So this is kind of wild. I haven't seen anyone else bring this up except for Sistine.
I got you. Bam.
Cool. So yeah, so when the IWM is the Russell 2000, so that would be small and some mid caps. So when you're in a more risk on environment, that starts to do well. And then SPX, obviously S&P 500. So it says that this has been, when you look at the Russell over the S&P, it's been in a bear market since 2021. There's no bull market until it starts outperforming. Well, we just tagged this line that we haven't tagged since 2001. And it looks like we're starting to break out against the S&P, meaning that people are starting to move away from the large caps and getting more risky, which would bode well potentially for an alt season if we can see that break out. So it makes sense if we're going to see QT ending, QE starting, more rate cuts coming, that we could start to see that correlation come true. So that's pretty cool. We'll see.
Yeah, I think the other thing that was interesting about this that you shared with me, Brad, was the fact that it's stayed correlated for the last 5 years.
Mm-hmm.
Since it was 2020 or 2021, whatever it was, or almost 5 years.
Yeah, look at this like correlation with Doge, with the Russell 2000, and Russell 2000 starting to break out. You see it, and it makes sense. So it says that the average market cap of a company in Russell 2000 is around 5 billion, median's 1 billion. Which is very similar to what you see in the top 100 altcoins. So it kind of makes sense that it'd be the same risk profile to an extent. You see the same thing with Ethereum. If I can find that chart, here's Ethereum. So like you see a very heavy, like the correlation to Russell 2000 is actually wild with alts. And the Russell 2000 just hit a new all-time high and it's starting to climb. So that could definitely mean that people are getting more risk on, which is what we really need, frankly, if we want alts to start moving.
Risk on, baby. Risk on. I definitely agree. I mean, it's. I feel like this time around, you're gonna have like I guess obviously we have like a dilution of alts, if you will. We've talked about that before, where there's so many alts to choose from. But I think you're gonna get a massive washout and have other tokens, specific tokens like DeFi tokens, DePIN tokens, stuff with actual fundamentals being selected, if you will. By market participants, especially if access opens up with the Clarity Act and the market structure bill. If we can open up some form of like funnel, if we can get some form of funnel into these actual projects like DePIN tokens, DeFi tokens, etc., yield generating stuff, then I think that we're going to see a massive run to those assets just because they're going to be seen as the next new shiny thing, right? The same thing with NFTs.
Yeah, but we have business models. Well,
exactly.
We're supposed to have business models, but
like I don't see like every time I explain Alki to someone, they're like, "How do I buy this token?" Like. So I just feel like when you get that moment when everyone's like, "Oh, I can buy Alki token like super easily," like that's the moment where everyone's like, "Oh, I'm going to flood a bunch of capital into that now."
Yeah. So speaking of NFTs and other things that have hit the news this week, which does relate back to our stream sponsor for this evening, the AWS outage. My God, wasn't that fun?
It sucked ass.
Yeah.
I hated it. I was trying to trade on Robinhood and it did not work at all.
It was bad. I don't know if this was happening to you. I was noticing that my iMessage on my phone was having a bunch of issues. Like I would get notifications for messages that wouldn't show up, and then they'd come in a really weird order. So unless my phone is hacked and I'm not aware of it, then it was very strange. It was happening right around the time of the AWS outage.
Man, if only there was a solution to that. Just to think of, some deep solution to that. I don't know.
It's a deep problem. It's
a deep problem. It's a
Sounds
really
like a deep
deep problem
problem.
with
Deep
3 E's.
solution.
You know, what I haven't gotten in a few days is any Coinbase texts.
That's true.
Oh, the
actually.
scam Coinbase text.
Yeah.
Holy shit, I haven't got one in like 2 weeks.
They've been
dude.
taking down the scammers, the
Yeah,
scam
you-
farmers. Yeah.
I'm
You
so
see
happy
that
to
they
find that out.
busted? They had like the sim farm that they busted
New York?
recently. Yeah, they took out a bunch, like a huge sim farm.
Was that the NBA gambling ring too? Or
Probably, yeah. That's
Well,
crazy too. Did you
that is
see? Did you
crazy.
actually look into what like the gambling, like the cards stuff? They had
Oh,
like,
they could see him through the table.
yeah, they had the rig machines. They could X-ray the bottom of the table and see the cards going. It's absolutely insane.
Wait, what?
Yeah, that
Talking
was
about
one of
the
the pieces
talking
of
about
news that came out.
Talking about the NBA gambling ring?
Yeah,
Yes.
there's some actual like poker gambling cheats stuff going on involved in that.
Oh.
That's adjacent to that. They all just arrest
Oh.
him at the same time though. But yeah, like they had they could X-ray through the table and tell what's going on. They had the chip holder things that could read cards. They had tampered auto shufflers, all this stuff. Absolutely insane.
Wow.
Yeah.
So
So not only was it illegal gambling, it was rigged gambling.
Yeah.
of course, it was
Wow.
Miami Heat player too. Oh my god, dude. Not giving Miami a good name at all.
Not at all.
We wouldn't
Anyway,
take that shit here,
crazy
though.
stuff. That I think we'll be hearing more about that for the next 6 months, probably, maybe a year,
For
probably.
sure. Well, they said that LeBron's like coach was like leaking injury information about him too.
Of course, probably doing a call sheet bet.
Yeah, probably making some money on that. And then Chauncey Billups was up in that. That's crazy, man. I just got a notification that Diddy just almost got murdered in jail.
What the fuck?
That's
Really?
crazy. Yeah.
What?
Yeah.
Dude, what?
Yeah. It's crazy stuff happening right now. Guys,
Yeah,
we
market's
got
definitely tanking out. Did he almost got killed? Market's definitely going down or going up, depending on how you look at it.
well, Bitcoin's holding above 110 now. I like to see that.
Yeah, the way I look at it is, there's a couple of ways we can go. Obviously, we're going up no matter what over time. It just depends on when, right? And so I feel like a lot of people are preemptively getting scared and leaving the market. Like I've talked to, at least a dozen traders that have traded Bitcoin, have traded crypto since like 2017, 2016. And they've been through multiple cycles and they're like, oh, well, this is just, there's so many signs pointing to this. I'm mostly in cash now. I'm stepping aside. I've liquidated all my positions. And I don't feel comfortable doing that. I mean, granted, I have liquidated a lot of my positions. I'm sitting mostly in Bitcoin and like several DePIN tokens and then just straight up cash, and kind of DCAing into other things. But yeah, I don't know. I like having some exposure. And so I think what's going to happen is if we do rip face, it's going to be such a big FOMO rally because you're going to have all these people that are just sitting on the sidelines with cash, all these traders that are like, oh, wow, I thought it was like the technicals told me it was going to do this, but I was way wrong. And it just rips face, melts faces.
Yeah, I think it's a possible scenario, especially if the China stuff gets sorted out next Thursday. They're meeting. You got FOMC meeting next week.
Mm-hmm.
You've got the Russian sanctions on oil. Like that could lead to, a peace solution with them in Ukraine because it's really gonna force their hand.
We got CPI tomorrow too.
CPI tomorrow.
Yep. Yeah, Nate touched people I know are out completely. Yep, exactly.
Yeah. There's a lot of people out right now. They're on the sidelines,
and the price is still up. And the price is still up. So
on Bitcoin.
Yeah, Bitcoin.
On Bitcoin. I think if we see like a big reversal in the charts, I think we could see people FOMO in. Especially if QE's announced, if the geopolitical stuff gets sorted out. Like there's a lot, and then the market structure bill gets passed. You get the government gets back up and running. We have spot ETFs get approved. There's a lot of things that could come together all at once in the next 2-3 weeks.
Yeah.
And I would imagine you're going to see a lot of people FOMO in if that's the case. So we could
Well,
definitely
isn't
see
Trump's
market
meeting
rally.
with China the day before the November 1st tariffs are supposed to be put into place?
Yeah, he's meeting with them next Thursday.
So it's like, and I think you sent me this, but the poly market odds have only a 15% chance of those tariffs actually going into effect.
Yeah. Trump came out like today. Apparently, it was like, we're gonna get a deal done on everything with China, like soybeans, like freaking rare earth minerals, like all of it's gonna. He thinks they're gonna get it all sorted. I mean, China's debt situation is pretty rough right now. Like ours is obviously, but their debt GDP is looking pretty bad too.
Haven't they been doing QE like for a while now?
Yeah. I think that like they had that huge real estate crisis. They've had to bail out their banking system. Like things aren't like super pretty over there either, So I think it makes sense for them to come together and get something done here.
Currency manipulation.
Yeah, we'll see.
The worst currency out there, my goodness.
And now he's good friends with CZ, so there's that.
I don't even know who Xi Jinping is, actually. A lot of people just told me he's not a terrible guy and really good with finances.
That's basically what he said.
I think that's so funny. I really, really do. Yeah. Gosh, but there's been a lot going on.
I was going to say, Brad, you were on the call with me last week. Like Ken joining. Heck yeah. With the Aoki call. Remember that? History was made, my man. It was insane, dude.
Yeah.
Yeah. I don't know if you guys saw or heard Tyler and Brian, but they what was it? They using Mentra glasses, using smart glasses. They successfully controlled 2 different robots from 2 different companies using Aoki software. They understand like the post mesh and everything in the little grocery store they have, and they ordered them to walk towards a certain location. They both successfully did it without running into anything, and like just automatically did it. It was awesome, dude. They're like, "Oh, Terry, can you walk here?" Yeah, I can share it.
It was super cool.
It was so cool to watch.
Ken's on November 15th, right?
Brad, stop, bro. He's gonna leave, dude. He's gonna leave.
That's the new Thanksgiving, isn't it?
Just
it's like
kidding.
new Friendsgiving.
That'd be a horrible time to launch a token is during Thanksgiving.
Right?
On Turkey Day.
That would be horrible.
I love how he's saying that. I love how he's saying
I'm trying to like misdirect the conversation, but all right.
By the way, Aoki's demo was amazing. Like I was just on, we had our intercognitive call this morning, and lots of amazing progress.
Yeah, this was the video here.
Over. He called the robot over.
Yeah,
super cool.
And now he called the other robot. Will the other robot come?
Yeah, it called it at the same time, and it starts coming towards them. It was wild.
It's doing it.
Dude, I'm just like, dude.
It's so crazy.
Dude.
Arshak is the robot whisperer. Let's go.
Yeah, he like looked at that exact spot, and he he ordered the robots to go to that spot. It was awesome. I bought more Aoki token that same day.
Pink sweatshirt.
It wasn't pink; it was red. Jackass.
It's only a matter of time, right, for Aoki to just go to the moon. So
I mean, honestly, I bought so much more that day, and I keep buying more. Yeah, I keep buying way more.
I'm about the dip today.
Yeah, same. I've been DCAing. But also been running my Tashi node, Ken. Been running that for a bit. Love it, dude. EaseFlow made it super easy. I'm not gonna lie.
I'm just appreciating how everybody has their name listed differently. Tyler's got his org first. Brad's got his second. Brian's got a title underneath his. William, you just got your first name, and me, I've got my name and my company title below. Like we're just all over the place here.
This is like the ADD name spelling title. It's awesome.
But it's like, what are the odds that you would have 5 different ways to do it with 5 different people?
Pretty good.
We should have been on Kalshi. We should have been on Kalshi for that one.
But for anyone that's OCD, it probably is annoying the shit out of them.
Yeah, exactly.
The market's so red, no one's listening anyway, so we're all right.
This is the time to build, then.
This is apparently the time to build. So
it is.
By the way, Nate said Canada Thanksgiving. That's funny. The 15th.
So Ken, what's going on at Tashi right now, man? I haven't talked to you in a while.
Yeah, where you been?
I'm
me see,
building
man.
the house,
We need to
rebuilding
get
the
one of
house.
those
Yeah,
hats.
it's true. Yeah, you're one of the few people that has like a legitimate excuse not to be on all of these things.
Couple weeks, brother. Couple weeks, I'll be in my house.
Almost there.
How do we
Yeah.
get a Tachi? How do we get a Tachi hat?
Yeah,
That's
what the
that's
hell,
a sick
dude?
hat.
Yeah,
I
you
tried
like
to I tried to
that?
get one from him in Singapore. He's
Boom.
like, "Oh, we ran out, dude."
You're
And I
bringing
was
it
like,
out.
Bro.
Well, we never had. We had old Tashi gear.
Oh, the
and,
old
like the
Tashi
old
gear.
logo.
That's what you
And I was
said.
like, I don't want that logo getting out there. I want to get people this one here.
Yeah,
this
he
one,
refused.
I've printed like 5 or 6 of these hats until we finally got this one right here. So this is the official gold background, black foreground Tashi hat. So I'll get you all. I'll get each of you one of them. Let's put it that way.
Let's go.
Let's go.
That's all that I care about, man.
The 4 of you on this call, besides me, we'll get them out to you, so you guys can wear it at every
Let's
every
go.
happy hour.
You hear that, Quez? You're not getting a hat because you weren't here. Haha.
What's up, Quez? No, I'll get Quez one too because he's
Quez is,
usually
like crying. We all have
Quez
hats.
is
We're like,
outta
Quez,
here.
you weren't there. Sorry, bro. He's like, no.
Need
no.
like
We're
a Tashi conduit like synergy hat. That'd be BA.
we'll do a
So add
t-shirt.
deep
How's
in
that?
there.
Ooh,
There you go.
yeah, that's what we need to like get like a DePIN day like legit swag.
We do.
Like not the garbage
Yeah.
stuff that's just like a bunch of logos on a t-shirt. Like
I'll-
it needs
I'll-
to look like a real sports team or something, like it's a real sports team jersey or something.
I'll tell Brandon, let me head it up, man.
Like an NBA
Give me a
team?
budget, I'll make stuff
Yeah.
happen.
You want to be topical? You can be an NBA team. Right.
Yeah, there you go. Get the jerseys flowing.
We just see a picture of Ken in the gambling ring.
That's right.
It's like a bunch of 7-foot NBA players and then Ken.
And
This is
then
Ken.
5'11" Ken.
Oh,
man.
I'm still thinking about that peppered crab, Ken. I'm still
Dude,
thinking
that
about
was
peppered
so
crab.
good.
It was so good, dude. We talked about it today with someone. They were like, "Oh, how was Singapore?" And I'm like, "That pepper crab was so good." That's all I kept saying.
Yeah. Let's just not remind anybody how much that costs. That was
I was
it was
shocked
for the
when you-
experience.
Yeah. When you showed me the bill, I was like, "What the fuck?" I was like,
I kind of knew
Oh.
what it was going into it, but that's why I kind of warned you up front. But
I think my favorite thing was the durian fruit, though. That was an interesting experience, I will say.
yeah, I'm surprised you guys ate through that thing though. Like,
I mean,
you
it was
guys ate,
good.
like,
I liked it.
okay, all right, cool.
It smells like socks, like dirty socks, but it tastes pretty good.
I think the more you eat, the less I think your tongue becomes desensitized to it.
Yeah.
So you end up getting more of the sweet and less of the bitter nasty.
Yeah, that was a good time overall. There, I'm really happy we did the whole Singapore trip thing, and Jay's place was awesome. Yeah, so thank you for the invite.
Yeah,
to
and doing
that.
all the DABA stuff there, that was awesome too.
Yeah,
we got to do
was a
next
really
year.
good
We got to
time.
make it official. We got to get like we got to make it the DePIN house for just like a whole day
Yeah,
of just like, and it's got to be like competitions, like events with announcers, and like it's got to be like intense. Like, were you there
I'm
for
down.
the perps trading? Were you there?
I was there. Yeah, we were there at the tail end of that when they started doing it. It was pretty wild.
That was intense. There were hundreds of people there. They had big screen TVs in every room. And we were like, why are people so interested in watching 4 people trade over $1,000? Well, 5,000 was the reward. But you remember what the winner was? They
Yeah,
had
South
$1,000 to
Africa
start.
made like
Yeah.
$7.
Yep. 1,007 was the winner on 3 hours of perps trading, starting at
That's-
$1,000.
Basically, didn't lose any money. That's like
Yeah.
everyone just
That's-
lost everything.
Crazy.
That's crazy.
Yeah, that was a fun time. We should definitely do that.
So DATs are becoming more and more popular. What's the story with that? What's your guys' opinion on that?
Well, we saw the helium news with them exploring a DAT. I think it's a solid plan. I think Brad and I talked about this before, but I think DATs are good for getting exposure to assets like Aether or helium in this case, like because Aether already has one now for traditional markets. But once you have an ETF available for those assets, or once you have like more streamlined access to those assets for traditional markets, there's kind of really no point if the MNAV is not really there. So that's my thoughts.
Yeah, I think one of the things that Brad and I were chatting about was the fact that it seems to make more and more sense for some of the smaller tokens where it's like less likely they'd have an ETF coming. They're not a blue chip top 20, at least for now, until maybe that transitions to something else. But
Bitcoin's still the king of the DAT though. So why are people bank in Bitcoin in their DATs versus like I think I saw a lot of skepticism for some of the smaller token inclusion in DATs, but like Bitcoin's still kind of the king in DATs.
It's a dad daddy.
But you've seen
the DAT daddy.
Even with Ethereum and Bitcoin, you've seen like the MAP premium really come down to earth. Like this year, for example, Bitcoin has been up, but like MicroStrategy has not performed that well this year by comparison because it was trading at such a big premium. So I think, and even Tom Lee came out, at BitMine like within the last 2 weeks and was like, "Hey, the bubble's kind of bursting on this thing." Like, I think the top DATs are gonna function well, but like there's going to be a lot of them that fail. There's probably going to be a lot of acquisitions from the better performing ones that acquire the underperforming ones. The concern though is that if they start trading at a negative MNAV, that they have to potentially start selling off assets, and that could have especially if they're using leverage, that could end up being like a spiral, downward spiral, where that a lot of people think this could push us into the next bear market, and could be like some epic collapse at the DATs. So there's definitely downside risk, I think.
Yeah, I think for the blue chips, there's at this point in time seeing the ETF approvals be speed lined a little bit, or just increasing in how fast the SEC is starting to approve them. I don't think it makes much sense to have exposure to call it a blue chip DAT, or if you are interested in, if you're like, oh, I want to start kind of a new financial instrument, if you're looking at anything that's Solana, ETH, Bitcoin, AVAX, so on and so forth, why you wouldn't try to go down the ETF route, because it just simplifies it a lot more. It creates a cleaner instrument just in general. And the only place where I can really see DATs in the future starting to make more and more sense is around maybe the small caps, where you want to have some exposure on the TradFi markets and you're not getting the exposure that you need in the crypto market. By the way, Brad, I don't know that robotics company, or was it the Quantum or the robotics company you're telling me about, where they were going to go to, they did a token launch.
Dynex.
Yeah. What's gone on with them? Because I feel like that's going to be a really interesting case study for the transition into the traditional equity markets.
I mean, their token's kind of getting wrecked right now. But they've been underperforming. Like, I think they have like a legit product, but they just got fudded so hard in the crypto space, they could never recover. And they're basically ditching DePIN. I mean, they're going to do an IPO and go public. So they're going to essentially transition everyone that's a token holder over to owning stock. It's gonna be interesting. I don't know how it's going to play out. There's a big pump in the token when they first announced it, but it's like kind of gotten wrecked since then. So,
and the twist is they're going to take their stock and make that an RWA, and that's the twist of the story. No, I'm just kidding.
I was like, wait, what?
I was like, you're taking tokens and making it stock, and then we're going to take the stock and turn it into tokens.
It's a whole new thing.
Oh man, I was like, wait, what?
No. Sorry, I literally just saw a tweet that was like, we're going to RWA everything, and I'm like, oh my goodness.
It's a CDO of a CDO, Ken.
There you go.
CDO squared.
We'll see how it plays out. I think the helium one's interesting. Actually, there's some news that was kind of crazy around DATs this week is that, Forward Industries is the biggest Solana digital asset treasury. And they just announced their advisors. They added Amir from Helium and Ariel from HiveMapper as two of their 25 advisors on the biggest Solana digital asset treasury. So I think that, if anything, shows that they are committed to like making DePIN happen for the Solana ecosystem. If you look at their official website, Solana's, they have a whole DePIN section. And I think like for them, it is important that they're not just known as a degen chain. I think they want to show people that like real stuff's being built, and there's a lot of DePIN happening on Solana. So I think if anything, it shows their commitment to it.
100%.
Sorry, I was looking on their website because I remember you saying that about the DePIN section. I think I've went through the DePIN section before.
Yeah, everyone immediately went to go Google what you're
Yeah,
talking
we're all
about.
on the
So,
same page.
It's
we're all
pretty
like, wait,
cool.
they have what?
Solana.com/solutions/DePIN. There you go.
Yeah, it's pretty awesome, man. I mean, they highlight a bunch of different projects, like DePIN projects on there. They have like a whole launch, kit on there. And everything I've heard, man, from all the different founders that Solana's been, especially ones that have moved from Polygon, they said Solana's been hugely helpful in their transition and trying to help them be successful. Mike Horton said that. I'm trying to think who else. I know Ario said that too with Hive Mapper. And then I was actually, there's been a couple tweets from projects that have moved over. A Cash Network is moving away from Cosmos and very likely going to move to Solana as well. So we've got a lot of projects moving to Solana, man.
You've got Polygon moving to Solana potentially. Whatever that means.
Wait, what? What?
Did you not see that? Their CEO tweeted this whole thing about how they haven't got a lot of support in the Ethereum community, and he's been trying to
keep
pulling the tides, but he's just not been getting what he wants, and then he sort of plugged Solana through part of that, and
a layer 2 on Solana. Vitalik came out though and was like, "Oh shit, we better do some damage control here."
Do people still use Polygon?
Polymarket.
I mean,
that's it.
People still
that's
use
a good product. That's a good product.
I did see there's like in like Central America and South America, there's some DeFi stuff happening on Polygon down there, but like a lot of the projects have kind of left. I think like, and speaking with the project founders, at least what they've told me is the Polygon Foundation, they got pretty big in the last market cycle and got a little full of themselves and kind of had this like sentiment that you're lucky to be on our chain kind of deal.
Oh boy.
And I don't, I haven't personally experienced that, but that's just kind of like what I've heard through the grapevine. And Solana's like very much like, hey, yeah, come over here. We'll be really helpful. I mean, you look at like GeoNet, they're integrated into the freaking Seeker phone, they are. Solana has been like hugely instrumental in helping them out. And I think also you look at the liquidity. I mean, there's a ton of liquidity on Solana, and obviously the fundamentals matter, but liquidity is important for sure.
Yeah, I mean, like DeFi value locked TVL, you have 11.2 for Solana. 11.2 billion, and then Polygon you have 1.26 billion.
Yeah, I don't really look at the TVL metrics too much or like read into it because I think Cardano's got like, what is it? What's the number? It's either
Cardano's way down.
Cardano's
down 289 million.
Oh, well then I'm way off. Never mind.
Yeah.
Disregard what I just said.
Yeah. It's so far it's ETH is number one still, then Solana, Binance, Bitcoin is right behind Binance on TVL.
There's a pretty good Unchained episode, and it was I don't remember if it was like the ecosystem head for Solana, but she was specifically talking about the kind of the token valuation piece, and she's like, everybody's been so fixated on TVL as a leading metric of financial success, and she's like, it's such a gameable metric that doesn't really mean a whole lot, and went through a pretty good justification for explaining why that's a irrelevant metric. And Laura Shim was like, well, but your TVL has gone down since some of the peaks. She's like, well, that's not the reason why I'm suggesting this is a BS metric, but it's worth checking out because I thought it was a good conversation from someone who's obviously ingrained in what's going on over in Solana land to have a holistic and also I thought pretty strong opinion on what should matter versus what we've been kind of considering as grail metrics, if you want to call it that.
And I would argue because and I agree with TVL. I mean, we saw this in the last market cycle. You'd see literally like TVL move from one chain to the next, and it's just people basically trying to trade and get ahead of the next trade. And once the bear market hit, all the TVL was just like dissipated. I think the metrics you should be looking at is not just volume, but sustainable volume. Like when you look at like pump.fun, that is not sustainable volume. I mean, it comes in waves, right? When you look at like a Hive Mapper or you look at a Helium where there's actual utility in a business that's being built in a sustainable business, well, that's sustainable volume on the chain. I think that matters more than anything. If there's actually, because that's where you capture the fees. That's how these L1s are going to succeed. And if it's about, again, like pump.fun, it's here now, but once you go to bear market, that's just not going to be there.
Well, you mentioned fees, and I mean, I'm looking at fees and revenue too. And honestly, out of all of these, like Tron has everyone beat on fees and revenue for the past 24 hours.
Yeah, what was interesting is I was looking at the A16Z crypto report that came out for the 2025 State of Crypto, and Tron had the second largest stablecoin volume.
Yes.
It's
second to
stablecoin
Ethereum.
volume.
I thought Tron was dead. I thought they had like $4 a day in volume.
No, Tron's making $1 million. The past 24 hours, the fees and revenue are over $1 million.
Well, also look up. They're well connected with Trump and World Liberty.
Yeah,
like Justin Sun is a huge investor in World Liberty, and they hold a lot of Tron. So
yeah, and if you want to look at stablecoin market cap, Solana, for instance, has 15.11 stablecoin market cap billion. Ethereum has 163 billion stablecoin market cap, and then Tron has 79 billion. So it's it's definitely second. You're right.
Yeah,
which that was a mind-boggling statistic for me because I had no idea that Tron was still used.
I didn't either. I only looked because I was looking at World Liberty Financial's holdings, and I was like, it's weird that they have so much Tron. And then I kind of went down a rabbit hole. I was like, oh, Justin Sun invested a shit ton of money in World Liberty Financial. Makes sense.
Yeah.
Yeah.
So is Tron just used for stablecoins then? Is that it? What else?
Mostly, I think most of all the activity is just stables.
Interesting.
Yeah.
So Robert's just excited about Tashi.
I'm just excited about Tashi.
That's right.
Yeah.
Let's go.
USDT most of its volume on Tron.
I think USDT does most of its volume on Tron.
Yeah, I agree. I believe so. I put out a video. I talked about Tashi on my live stream yesterday. I posted a video today on you guys.
Heck yeah.
I'm excited. I mean, hey, that launch on November 5th is going to be great.
Oh my goodness. Now you're really killing me.
I'm just kidding, guys.
That's like 2 weeks away. I'm having a heart attack.
Disregard everyone. That was a joke. That was a joke.
Okay, so the news has been very bearish lately. What are you guys excited about here the next few weeks, months, from now until the end of the year?
Christmas.
Yeah, I was about to say, I literally thought Christmas. I was like, Christmas,
Thanksgiving.
Christmas. My soon-to-be-born child in March, and Christmas. That's
the
wow, nothing. Nothing other than
I'm biting my tongue right now. So,
I mean, obviously, I'm excited for certain TGEs that will not be named coming up. Well, we have 375's TGE coming up in like 5 days. That's awesome. Excited for that. Excited to see if these tokenomics changes that have just occurred in Helium take some, have some major impact in the near future. Yeah, I don't know. Excited, man. Excited for a lot of things. Excited to be alive. Yeah.
Helium broke above $2 today. It's holding.
Nate, what's that supposed to mean, Nate? What's that supposed to mean? Huh? You got
quite a few TGs coming.
What's that supposed to mean, buddy?
Deep. You got Conduit. You got 375. You got Tashi. What do we got? What else?
Daba.
Daba. Yeah.
U4's not dead, baby. Let's go.
Yeah.
Will's a really excited one, but I gotta pump it up a little bit.
Has Conduit announced a TGE?
No.
Not to us.
Okay.
No, Conduit's TG is actually
it's November 15th. No, I'm just kidding.
November 15th. Look who decided
I don't know if
to
they're
join
going.
us. Mr. 375 AI man himself. Cheers, my man.
Big day for 375 AI.
Big day.
Big day indeed. This is the first one of the day. Finally,
And they're launching on Kraken and Bybit. I look at the
I can neither confirm nor deny absolutely anything.
It's you can follow the EAT token on chain. I'm gonna
See, Brad, the truth is not a lot of people are as perceptive as you are, the on-chain sleuthing.
How'd you find that CA?
Actually, I have an on-chain quant.
Is it Tyler? Is Tyler the on-chain quant?
No, it's in one of my Discord groups. This guy, the crypto way, dude. He finds everything on chain. I don't know how he always finds everything, and he'll send it, and I'm like, Talk about that. Rover's starting to burn tokens, by the way. They're testing out token burns. So they're getting ready to burn some tokens. So there's a lot. Dude, I don't know how he finds everything. It's crazy.
That's it.
He sends you a DM at like 3 a.m. He's like, you should look at this. You're like,
The
oh, shit.
crypto.
Maybe all my faith in Brad has been like false hope because he's become my quant for all this data, but I realize it's just secondhand information he's getting from some random dude in the Telegram
It's coconut
chat.
telephone, bro.
We got a name now.
Filtration. Yeah.
Time to poach him.
Can we invite him to our private chat? No.
Look, it's confirmed. The crypto way. He's in the chat.
Yep.
There he
He
is.
knows.
It's confirmed.
He knows.
This is the way.
With follows right now.
Hey, man.
I was gonna
checked
say.
the way.
Myself included, straight up.
Is that actually him, Brad?
Yeah. He's the one. He always like finds the
He's the
on-chain
one.
stuff. Yeah.
He is the
Drop
way.
a follow right now.
Everyone's going to follow him.
Tyler's like
he's-
typing
you gotta
away.
show love. What are you talking about?
All right.
He's like, I'll offer you.
I'm
I'm
down.
gonna
Let's
put you on
go.
retainer. I'm putting you on retainer.
Got him right here, you know. Yo, so what's up, guys? I mean, what have you guys been talking about? I'm so
You.
sorry I'm late to the conversation. Oh shit. Hopefully
about
good
you.
things, maybe.
Yeah. Only good things.
Nice.
We
But
talked about a lot. We talked about the AWS outage. I know we got to get Ken's take on that because I know there's some things that I'm sure he'd love to share with his post about said outage not getting posted or getting getting stood up. Talked about DATs, tokenomics, all the TGEs. I hear we're eating soon. So
also true. 5-day
So-
countdown. It's coming.
Let's go.
I mean,
What could go wrong?
Don't say
Dude,
that,
what the
man.
fuck? bro?
why? So much.
You
to
just
go
blame
around.
me.
That's it right
Just
there.
blame me, guys.
Yeah.
Tosh,
I'm
you have
optimistic. I'm very energetic. I'm very excited about it. I think it's going to be fun, but yeah, a lot of energy for sure. A lot of TGEs, a lot of exciting things.
I'm
Wow.
excited, dude. I'm excited. The allocation looked juicy. I'm gonna boost mine. 12 months, baby. Let's go.
Nice. Yeah. How are you guys assessing that? Like, what do you do?
I'm
you
really
see it as,
disappointed, and I'm going to crash out on the timeline quiz because it wasn't enough. And if it's not $100,000 worth of money, I'm going to be really, really upset.
Honestly, Tyler, mine should be 150K, I think. And if it's not that much, I'm also crashing out and fudding everything.
I've already started writing my death threats. So
he has
They're all
pre-written
directed
death
at
threats.
Buzz.
He just has like copy paste send.
You know, the good news is we actually haven't had a lot of super negative things. Like some people were a little upset. Just this is from the perspective of a community manager who sees everything as it comes in real time. And I would say that the response was overwhelmingly, maybe not overwhelmingly, but overall positive. But like the crash outs, the generational death threat, calling out your mother and your entire family line, the whole Manad India will never forget this. We didn't reach that level, so
That's good.
pretty good, I would say.
Good.
5 days away. It's counting down. We're getting there.
Yeah.
Well, I think the other thing too that we're going to see, and this is not financial advice, but this is my own perspective, is that the quality of a project like 375 and the upside potential that they have is so significantly more than the fully diluted value of the market cap that's being launched at. And so I think it will be one of the first DePIN tokens to do exceptionally well at launch. I could be proven wrong, but if it does dip, I will be buying. But I think the price that you guys landed on was more than fair for people getting in.
100%.
Appreciate that feedback.
I mean, you're like early investors from 2 years ago bought in a 55 million FDV, and then you guys opened it up to a public sale 2 years later at 75 million. I was like, why do I live in the U.S.? What the hell, man?
We tried to keep it as close as possible to what some of the investors got in. That way people can really say that they got in at basically the same level, and quite frankly, a little bit further along than we were 2 years ago. I mean,
A little bit.
Just maybe I'm being a little modest, I guess, but yeah, substantially further along, perhaps. I mean, hardware's out there, collecting data, clientele's coming in. I mean, there's interest. There's interest even from outside of what is happening on Web3, and I think that's maybe why a lot of what happens in Web2, a lot of that enterprise attention, it maybe doesn't always make its rounds through the Web3 crowd, or at least in my timeline, which happens to have more like crypto, NFT, kind of like people who are in crypto for the culture, less about like DePIN specifically. I found that most of DePIN hasn't even penetrated that group whatsoever. I don't know if you guys agree or disagree with that.
I agree. I definitely agree because I talk to people, like I run a crypto trading space in the morning now with Wolf Crypto, and the people I talk to on there, I have new guests on all the time, and they don't even know what DePIN is. Like every time, they're like, like explain helium to me, and like the space literally becomes a me explaining DePIN to them for like an hour every time, and they're like, this is so cool. I didn't know I could do this.
Will's probably done more for onboarding people into DePIN than
I've sent more like Helium, Aoki, 375 AI. Like I've sent more DePIN information the past like month than I have ever to like random DMs all the time.
So Quez, what can you tell us about said clientele?
I can share that there is news of a partnership coming like really soon with a Fortune 20 company.
Google.
I'm not gonna say yes or no to absolutely anything, nor will I confirm nor deny absolutely anything. But I will say that, you know, I quite like the quietness of it. I can't say much more else because honestly, truthfully, I actually don't know much past my partnership. Like I'm just not in those conversations, quite frankly. But when they make the rounds to me, I try to proliferate it. Maybe not. You never actually retrace that. I never said that.
Harry, he doesn't share private information. That's right. He doesn't.
Does not share the alpha. We can't confirm. We probe very difficultly, but are very aggressive.
And randomly, we'll be like, "Hey, Quez, what's up with 375? You know,
can't say anything.
Tell us. We need to know."
That's the way it should be. He's loyal, and that's the most important thing that you can have for a.
We know he's your fall guy, but he doesn't share information.
But yeah, they run a tight ship, man. I love what our team does. And man, like I think what's gonna be super cool now is like post TGE trying to bring a lot of the devs out more, just so like people can start putting faces to the names, you know, and see the amount of love and labor that these guys have been putting in. It kind of sucks because like I get to be like myself, Harry, and I know like TV and Rob also might also feel this way, but like a lot of the guys that do the heavy lifting that make a lot of this shit possible, they don't go on Twitter. They're not on our DePIN happy hour. Maybe we should change that, right? We should consider bringing them on, right? But the people that do a lot of heavy lifting in a network sometimes don't get the light of day. And I think post TGE, we're gonna like, since they can kind of, you know, work on other things, but maybe make some more time instead of being like go in pre TGE TGE time. I think it's gonna be fun, you know. So people can see the. Sorry.
Yeah, no, I was gonna say. I think the interesting thing is though that's not a unique thing that's happening with the 375 project. I love the fact that you're gonna continue to highlight what's going on, maybe behind the scenes a little bit. But you know, I chat with quite a few different founders in the space, and you know, I know Ken can allude to this. Have a lot of conversations with him, conversations with Nate. Like, there's so much happens behind the scenes that never makes it to the timeline, never gets to make it anything else, just because it's like you're running a business in addition to trying to foster the community element. And so although there's that disconnect, it is nice when you can also retroactively maybe showcase a little bit of that as well, but it's difficult. And like I would say 90% of the projects that I get to chat with, you see 10% of what's happening, maybe even 5% of what's happening, because so much is going on behind the scenes. And so it's cool that you guys are doing what you can to illuminate that, but at the same time, it's also good for people to know that the norm is mostly building, and then you see a little bit of the public stuff when it comes out. But for the good projects that are executing, it's like 5 or 10% information that gets disseminated, 90% just, you know, behind closed doors working their asses off. Isn't that right, Ken?
I concur. As I sit here talking to Tyler, and I owe him some revisions to some documents that he's put a lot of effort into. So I got to go through and do some commenting on it.
Comment away. But it's hard because, you know, there's this almost this expectation that people need to open the kimono on everything, but it's a real time sink in a lot of ways. And so you have to be able to have the bandwidth to actually build the company while simultaneously letting people in on what's going on, all the developments. But it's almost a full-time job in a lot of respects. That's why there's community members that do a great job like Quez to help facilitate some of that dialogue. But it's I think almost in the Web3 space, it's almost to a detriment in some regards that we have this level of expectation that everybody deserves the same seat at the table as like an executive at a company, for example, because it just sets this precedent where if there's no news, it's like nothing's going on, even though in 99% of the cases with really good projects, that's far from the case. And then on the flip side, there's these deals that take long periods of time, and you're working on stuff, and so you also have maybe misaligned expectations around, oh, these things should just happen within a week, and it's like that couldn't be further from the truth, as anybody who's ever done something like this would be able to tell you. And so hopefully that'll change a little bit over time, but when it's all this like build in public, everything's kind of open, it sets some interesting expectations.
Well, the DePIN community is super patient, though.
That's true.
I would say that. I mean, the vast majority of us, I feel like, are right. There's some
No,
aspects.
I'm being super facetious, dude. Like, I think the contributors expect ROI in like 2 weeks. They don't understand. Like, most people don't understand building a business, dude. Like, they want to plug in a box, they want to ROI in 2 weeks, and they expect that like you're gonna have customer announcements within the first like 3 months. Like, I don't think, to Tyler's point, I don't think a lot of people understand all the building that has to take place at all. Unless you worked in the startup world, it's really hard to comprehend what.
I feel like the mass deployers are very patient because, I mean, like you, all of us who have deployments out, like a good chunk, is like we're building our own small businesses to a degree, and it's exhausting. Like,
well, how do you mitigate that in the community though? Because like that's the case with anybody who's built any company, and the traditional approach is you go develop product market fit, you get into market, you start generating some revenue, and then you start your fundraising rounds to grow the company. It's like nobody's going to invest in your seed if you don't have product market fit, and you don't have product market fit until you have customers. That's how the traditional startup world works. So nobody hears about you until you're successful. Traditionally, we do so much promoting and cheerleading and hyping up in the Web3 space before we've even like written a line of code. And we see this from gaming and Web3, right? It's everybody's putting out games that should never see the light of day because of that pressure. And then everybody dunks on it and you're like, well, that project failed. And it's like, technically that's a 6-year project that you expected to be done in 6 months.
Yeah.
Like that's just not how this space works. And so how do you mitigate that? Because a lot of this is, we're trying to build a whole new business model here.
It's one of the problems. I mean, really, when you have an actual startup, like people working for a startup know what they're getting into, or they're just not going to make it, right? I mean, you have to be able to adapt and deal with a high stress situation, and it's just a totally different work environment. I think, unfortunately, there's like a precedent set in DePIN that's kind of being reset this year, actually. But I think up to this point, there was an unrealistic precedent set. And I think it was causing a lot of issues and a lot of hostility and toxicity within these communities, really. I mean, look at the first market cycle with Helium, dude. It got super toxic for a while. So it's a battle for sure. I think over time we'll see a transition to an extent, especially as we start to get more TradFi investors in, and there's a little bit of a reset in a different mindset around DePIN in general, and really focusing on the fundamental side, as opposed to, hey, plug in box ROI and buy Lambo in a year. I think we need to kind of shut that down to an extent. And I think that's the one silver lining of this year with the down period, is that I think some of those people are washed out of the space. And like, I think it is a bit of a reset happening right now. So it should get better, I would think.
Well, we can cordon that off and call that like the Macau of Web3, right? Go there and like gamble all you want.
That's what I think trading is for.
Yeah, go for it. You know, maximum 10x leverage, right? The max
1001x on Aster, baby.
On Aster.
Let's go.
I know, but in that competition, they're like, you can only max 10x, and I'm like,
No, I think they said 50. 50,
oh,
right?
did they say 50?
I think you
Oh
use
my,
50.
even worse, dude. I'm like 2 or 3x. I'm like starting to get ulcers, and they're like,
they might have
max
said 10.
50.
I don't know. They said 50 or 10. I forgot what it was. But
It might have been 50. It was something that would have definitely like
because there was a 100x
Yeah.
option, and they said you can't use 100x. They're like, you can only use 50.
That's so crazy.
Yo,
that's Macau.
One thing I wanted to add on here was like in order to answer that question, right, of like how do we get the community to kind of be more understanding? I think a lot of it is about managing expectations first and foremost. And then also I think the role of a community manager is actually kind of evolving a little bit, such that Tyler mentioned earlier that it's a time sink, that it's like a full-time job. And in some sense, the time sink itself is actually not the role of someone who's facilitating all of this together, i.e. the sharing of what's happening behind the scenes. The time sink is I would have to pull my lead developer away from whatever the fuck he's doing to show you what he's working on. You know, and like those are cool, those are fun moments, but it's like you're constantly in this sway of prioritization, you know, and you know, maybe you want to
companies, Web2 companies do that all the time. I mean, Apex Legends had like a whole Trello board where they like documented any like confirmed bugs in the game and their progress towards developing it. So people build in the open all the time. I'm not that you're right. I mean, right now I'm taking some heat because I haven't been communicating to the community all the stuff that we've been doing behind the scenes, and it's massive amounts of progress we've made, but I just haven't been telling people every day, hey guys, look at what's going on. Hey guys, look what's going on. So we just brought in an agency to help us kind of organize all of that and kind of start building a cadence on that. So building in the open is fine. But you're right. It's a full-time job. And it's something that you can do that's valuable. I just think of like with Helium, the fact that they're taking revenue and pumping it back into the token. Part of me wants to think of that as dividends. Another part of me is wanting to think of like, you could have done better things with that revenue than just pumping it and burning it.
I'm curious, like an example.
It's revenue. There's a whole lot I can do with revenue.
But if you were in Helium's shoes, like how would you, like, what would you like maybe?
Hell yeah.
Well, that one's a tough one just because they had so much early investor pressure. And that's part of the game we're playing right now, right? When we come in here and people are participating as a community in fundraising, there's a commitment, there's a fiduciary responsibility to do what's in their interest. And I was going to bring this up yesterday. What was it yesterday? Yeah, it was yesterday on the Davos space where I was like, you know, the challenge with living in this space is there are so many stakeholders and we have to align the interests of all the stakeholders. And, you know, people talk about capitalism being horrible because everything is catered to the shareholder. And what we're trying to do is we're trying to extend that out to our consumers and our demand and supply partners. We're trying to extend that to our builders, our community for marketing efforts. So we're trying to extend the business model out to them as well and make them participate, but you still have that friction, right? If you have early investors that are demanding that you buy back and burn, like that's their demand, that may not necessarily be what's in the best interest of the project, but there's that friction point there. And so, and that's not unique to Web3, by the way. That's exactly what shareholders are going to do in their shareholders meetings when they're voting for dividend distribution, right? So you're still going to have that same kind of pressure from investors, even in the Web2 space. It's just, I feel when you're dealing with people who are not savvy investors, who maybe don't have the appropriate expectations, it can get a little hostile and maybe frenzied in a way that doesn't happen in Web 2 so much. So I'm trying to figure out how do we balance all of those things out? And what we're trying to do at Tashi is try to balance all of that through economics. And so all of the algorithms that drive the economics and incentive systems. But I mentioned this yesterday on the podcast or on the space as well, that like one of the best questions I got from an advisor was, why would somebody short your project? Like you have to understand who your adversary is in your market against your token. And he's saying if you understand that, you also understand the rest of the incentive model there. So
yeah, I agree with you in the sense that, you know, there's better things you can do with revenue. On the flip side, the only two pieces of pushback that I've been trying to spend, I don't have a lot of extra free time these days, but I do try to spend time thinking about it as much as I can, which is on one hand, the protocol function for most of these networks is you take a certain percentage of your revenue and you buy the token in the open market and you burn it. And so, you have to either figure out how do we modify that so that we've got a few years where we can reinvest everything to have as much growth as possible. And then you kind of manage that. The other piece of it is that, and I really want to have a little bit of time to go try and do some like on-chain analytics with this, but especially when you have hardware-based projects where people are buying and they've got, either sunk costs on the hardware piece, or they've got ongoing operational costs on, paying a store to deploy a Helium node or whatever it may be. You've got because you've got some OpEx or even just like a CapEx investment in there, you're going to have what I would consider probably a higher percentage of net sell pressure. And so if you don't find a way to balance that at all, then you've got this perpetual race to the bottom. I'm not suggesting that the answer has to necessarily be take revenue from the network and buy back the token and burn it per se. But I do think that in some sense, if you think of a business where you've got, just call it like 50% OpEx, 50% CapEx, if you're distributing the CapEx expense across stakeholders who are paying for that and you're not paying for it, I do think that there should be some built-in reward mechanism around how you manage the fact that if you're giving them tokens and then like there's just everybody's just dumping, then the price is going to tank and then you can't sustain the network. And so I don't necessarily have the answer to it, but I do think that there needs to be some additional kind of market pressure on the inverse side of the supply rewards that are going out, because without it, if you don't have the token incentive to keep people going, then the network's going to fall flat anyway. But I hear you that there are probably better things to do in the early stage of growth with revenue than just buying into the token.
Especially if the goal is to create demand so that we have more revenue so that we can pay our operators more.
Yeah.
Like if that's our job as a DePIN project is to build the connective layer or the substrate between demand and supply, and then to onboard that demand and supply. Like those are our two primary roles, is to build the technology and then to onboard both sides. Now, that being said, I get what you're saying. And I think sometimes the challenge, I mean, even when I was having discussions with GeoNet, I was like, okay, cool. So it costs this much to buy one of your devices. And at your current emission rate, based off of my grandfathering in my region, in 3.5 months, I will have paid back my device. And that was exactly the way that I was thinking. And everything beyond that's just gravy. So like for the next 2 or 3 years, I'm just going to make a bunch of money on GeoNet. That's the way I was thinking when I was thinking about buying that device. And I think that's a fair way to think about it, because we're asking William to go build the business around deploying nodes. He's got to be able to cover his OpEx. He's got to cover his CapEx. He's got to have some type of margin in there. And that's, so I get it. I wonder if there's a better way to do it though, because, there's also the other side of, if I've got partners in my startup, we're all taking the risk. We're all taking the haircut early on of no salaries or low salaries just to get to market and generate sufficient revenue for us to sustain this long run and hopefully exit at some point. And then we all win. Like our customers win, the person who purchases the trade sale or the IPO or whatever wins, and all of the founders win. I just think we kind of lose that a little bit because we're coming out of Web3. We're doing things differently. But to your point, this DePIN's so different than every other project because you have that CapEx commitment. You have that OpEx commitment that is not there everywhere else. But I kind of think of all of my operators as like co-founders. So early on, until you get to that that kind of profitability, it's almost like, should we really be pumping tokens pre-profitability, or should we reserve that for like huge gains post-profitability?
I'm on that wavelength with you, Ken. You don't have to convince me on that front. I do think one of the other comments that you said around the ROI part, which is, this is, in my opinion, one of the other systemic issues within DePIN, is that it's become almost like a race to the top of who can have the fastest ROI in device, because then you get the attention, then you get everybody wanting to participate. But there is no way that you can convince me that any network has a sustainable emission rate by being able to pay back a hardware device that costs any amount of money in a few months. Any other thing that you would ever invest in would take significantly longer than that. Yeah. So In conjunction to the what does it look like pre-revenue or pre-profitability. The other thing is that I think we set some really dangerous expectations around the ROI periods of these hardware devices, because at the end of the day, the revenue is not going to match it reasonably close enough. And then you always playing this catch-up game to balance or offset the wild amount of emissions. And, you've seen this project after project where they can't get enough critical mass on either the revenue side or just continued participation. And so you've got a ton of sell pressure that just pushes the token into the ground. And I think that outside of your point around like where should the incentives begin to distribute themselves to these other stakeholders, that ROI precedent that's been set is really dangerous.
How do you communicate to your node operators then, or your main stakeholders then, the people who are spreading your DePIN network? How do you communicate that, like, hey, we're gonna have to delay your like massive, not massive, but delay like a substantial amount of revenue, like to further push this project out until later on, for the promise that later on there will be more revenue for you? Like how do you delay gratification for these node operators?
I don't know that there's a right answer for that. I just feel like it's somewhat of a dial, like in whichever side that you start to apply a little pressure, the opposite side is going to feel that that push. So I don't know.
Because if you're taking most of the revenue, right? You're taking let's say like instead of burning the tokens like Ken's talking about and transferring immediate value to your stakeholders, you do what Ken said. You start taking in more revenue to scale the business further, and for the promise that later on there will be more revenue as you scale out and
that is true.
But so that's less revenue to your immediate stakeholders, though, right?
Yes, but you need those immediate stakeholders to take on the risk of setting up the network with no promise that they're going to have any returns on their investment, or any demand for the supply that they're standing up. So it's like, this is what I mean, right? It's like this really, really delicate, like moving balance that
you just have to communicate it. Like, I guess like you have to find the right people to do it.
Is it simple? So my argument here is I think the market will eventually mature to a point where they understand, because they understand what DePIN is a little bit more, they're willing to have more managed expectations with it. That being said, I still think there's perhaps a dynamic rate that could be adjusted based on the needs of the network, right? Which is probably somewhat close to what people are doing right now. Is like, hey, we haven't proven absolutely anything yet. Take a bunch of risk and buy all this hardware, set it up, and we will try and get demand as quickly as possible, and delay that revenue that you could get, that you maybe even should get because you've already taken on the risk before anybody else. But just hold up, that's a.
So the cool thing about Tashi is you're not buying any hardware. So
true.
And maybe to Tyler's point earlier, when you are buying hardware has like a lifetime. Like it will become obsolete in a few years. So that payback period, maybe to address what Bobby Steiny was saying or asking, like it has to make sense that there is some like justifiable and compelling ROI within the lifetime of that device. So, and I'm guessing there's going to be a whole number multiplier you're looking for and not a fractional multiplier. Like you're looking for a 10x return over a 3-year period and, or something like that, right? When you buy a device. And so there's some number that you're looking for that would make sense as a business. I think a 10x multiplier over a 3-year period is like a reasonable expectation for you.
I think that's a phenomenal expectation.
Yeah, that's really good.
Well, but so let's put this in context, right? At some point, there's going to be a diminishing return on even on Tashi nodes, right? When we have 3 nodes within 20 milliseconds of everybody in the world, we don't need any more nodes. We're going to hit that equilibrium point at some point.
Yeah.
Right. And it's the same thing with every network. There's a reason why everybody's doing these grids with diminishing returns as you add more nodes to the grids, is that you only need so many nodes. So while you're still not saturated, that kind of return, I think, would not be unrealistic, because I think of software. When I build software, I'm looking for at least a 3 to 4x return on on running the infrastructure running the sales, all the expenses related to that project. I'm looking for a 3 to 4x return. So, but we're going out to the community and saying, hey, you guys who are not professional entrepreneurs, we want to cut you in on this business. We want you to go do the deployment work for us. But guess what? You don't have to do any of the sales. You don't have to do any of the management. You don't have to do HR for us. You can do it for yourself. Heck, we'll even maintain the hardware for you in many cases and monitor it for you. Like, it's like, and this is similar to like channel sales, right? So in channel sales, you have people who go out and they sell on your behalf, and you pay them anywhere from 10 to 25 or 30% commission to sell your product. And so anyway, I think that, you know, it's realistic to think of returns in that sense, somewhere between like a 3 to 10x return on the device would be a reasonable return over a 3-year period or over the lifetime of the device, which I can't imagine is longer than 3, maybe 5 years.
Yeah.
But like, these devices are going to get old and start failing and having issues or be outdated. You're going to want to replace them. So, I mean, GPUs are already there, right? Every year we're replacing
Every year it's something
every
better.
GPU.
Don't remind me, Ken. My 3080 is starting to go.
My freaking 3080s here, it's doing amazing, and I'm just like, we can keep doing this.
I
Leave it as
can't.
long
I
as I need.
overworked the hell out of it, so it's just like, and I'm like, oh shit.
Crazy that y'all talking about 30s. I'm on the 2070 Super right now. Holding
I'm
it
throwing
down.
it back, baby. Throwing it back.
How do you support the token price, though, guys? Like, that's the question. Like, how do you support the token price? Like, where's the buy pressure on the token come from? Right? Because like, if you're investing in a publicly traded company, you're buying stock to invest in it. That's where the buy pressure is coming from. And DePIN,
you want the dividends
in hardware.
Yeah.
So like, who's going to buy your token? If there's no buy pressure tied to revenue, and I get it in the early stages, especially, like, you want to reinvest for growth, but how do you stop? Because they're going to, you know, the hardware investors are going to sell. So how do you support token price? Because your project's going to collapse if you can't support token price.
Ken, tell him, Ken.
Well, yeah. So you make staking a requirement of revenue rewards. So instead of thinking of it like dividends, it's like you're participating in the securing of the network. So in our case, for example, we think of it as you have token holders and you have operators, right? Operators are operating the devices. I'm going to throw out some very high level numbers that are not finalized, but imagine that I don't want to commit to this. Please, nobody take this as a commitment. But imagine if I have a bunch of hardware, but I don't have any Tashi, and you've got a bunch of Tashi, and you're willing to back me. You're effectively collateralizing my hardware, because that's the security model of the network, right? So you're going to get 60% of my rewards, and I'm going to get 40% of my rewards. Something like that, right? Because I'm the operator. I'm taking the infrastructure risk, but you're taking the financial risk on this. So you're going to get the majority of the rewards. So if I earn $100 today, you're getting $60. I'm getting $40 as my reward. But we're only getting that reward because your tokens are staked, and then my nodes are bonded to your staked balance. That's the only. So revenue flows directly to the participants who are securing the network. And this kind of relates to the discussion I had with the deputy commissioner of DFPI yesterday. I was in San Francisco at a regulate. It was a panel where we talked to regulators, and part of that discussion with her was, I want to sell Tashi. How do I do that and not fall under your regulatory purview? I don't want her enforcing California DFAL licensing law on me and require me to go get a license.
You
she
move out of California, Ken. That's the answer.
Yeah, California's
Florida, baby.
Let's go.
I mean, so Tashi's two companies. We have the Singapore company, which owns all the IP. We have the BVI, which manages the treasury, right? So, like, I'm not worried about it for Tashi, but I do want to build a model that's working with regulators to build kind of like that framework that other regulators can look at. But so I asked her about it. She goes, well, why are people buying Tashi? She's like, are they buying it on speculation and not participating in the operation of the network? I said, no, they're buying it to stake it to secure my network. They're collateralizing their nodes. She's like, cool. Sounds like it's related to your business. If it's not related to your business, if they're not participating in the operation of your business, I'm going to look at it as a security, and we're going to have a DFAL license discussion. She was like, but if it's related to the operation of your business, either they are a node operator getting rewarded in your token, or they're a staker collateralizing the nodes for good behavior as part of the reputation and selection algorithms. She says, it sounds to me like they're part of your business. and they're contributing to the success of the operations of your business. Now, what people do with Tashi outside of those two functions, either running a node or securing the network with collateralized Tashi, that's up to them. As long as I'm not in the business of facilitating those operations through swapping and stuff like that, I don't have to worry about DeFi. So that I guess my point is when you can tie staking your token to earning revenue, and there's an annuity there, there's like a sustainable revenue model there. Now what you've done is you've created not only decreased circulating supply because you're requiring staking to be a function of this, because it's required for collateral, you got to lock it up. So you're decreasing the circulating supply, but you're also incentivizing people who want to participate in the revenue side to buy the Tashi. So you're creating buying supply. Now the real question is that pressure enough to counter the sale pressure of the adversarial market?
Right.
That's the real question.
And the other question is, because you even said like at a certain point you're going to have enough nodes. So when you no longer have buying pressure to stake more, then it's just tokens being distributed because everything's gonna be staked for node operators at that point. So where's the buy pressure come at that point? And like, what's the end game? I guess. I mean, you mentioned like an exit strategy. Someone comes in and buys the protocol. How do they make sure? How are they going to incentivize node operators to continue operating? Are they going to move to a USDC model where they do like a revenue share? Like, because at some point, if you guys are exiting and cashing out, the node operators are going to want to sell their token. How do you prevent a collapse of the token price at that point? Like what's the end game, I guess?
Well, so the end game is that revenue opportunity is going to continue to grow. It's related directly to demand, right? So nodes in our scenario, the supply is related to demand. If we can create sufficient demand and that demand continues to grow in multiple verticals, by the way, like, so we're talking AI coordination, robotics coordination, gaming, multiplayer gaming, multi-master databases, all of those things are use cases that we can move into, that we're being very strategic about which ones we move into first. And they're all multi-centabillion dollar industries, right? There's no shortage of revenue opportunities for the supply side. And so where I'm saying we're eventually going to saturate the market, I think we're going to find equilibrium, but that doesn't mean the equilibrium isn't going to continue to grow, to move in a direction. And the buy pressure comes from who wants to participate in that. Like if everybody wants to participate in it and everybody's Tashi is staked, the price of Tashi is going to go up because nobody wants to sell because they're all banking on the growth of every industry that's going to benefit from the DePIN. So even if we exit, so an exit to me, we've got Tashi, the equity company, which holds all the IP and has a perpetual license to the Treasury and Network Company, to the BVI. So that company will have a persistent license to use it for the network. Tashi earns revenue right out of the revenue share. The operators earn revenue the same way. So we can sell Tashi, we can exit out of Tashi any day. That doesn't stop the network from continuing. It doesn't stop people from continuing to maybe to William's question earlier of like, okay, how do we earn more for people? It's like, well, now you get to participate on the supply side too, or on the demand side. Sorry, you're already participating on the supply side. But if you become part of the channel sales of the demand side, now you're earning commissions on the other side of this equation and taking some of that share that Tashi would have gotten, because that's our job right now to do that. So I think there's a potential to decentralize every function in the company. And for us to exit is like, okay, I'm going to cash out. And guess what? There's going to be a huge demand for Tashi because everybody wants a piece of that big revenue pie. And so everybody's going to be competing for that Tashi to stake. And again, like our strategy is there's no specific vertical. We have effectively a very smart, resilient global message queue that will never go down. So if you want to build DNS, I'm looking at AWS here. If you want to build DNS that is decentralized, you can build it on Tashi with our message queue. If you want to build gaming, if you want to build robotics, AI, all of those things can run as a fundamental, using Tashi as a fundamental piece of that stack.
So do you, so that makes sense. I mean, do you see a point, and to your point, like if the staking is not enough to offset the sell pressure to stabilize the price, do you see a point where it does make sense to have some percentage of revenue go to open market buys and burns, or do you think that just is not necessary at all?
I'm generally pretty, I'm pretty anti-burn in most cases. I feel like it's an artificial mechanism, but I can see an argument for it. And again, this is something that as a Tashi holder, we will have discussions in DAO vote type things happening at the foundation level that I think may drive the decision that direction at some point if it makes sense. What I don't like is I don't like Burns being used as an artificial inflation mechanism. I'm sorry, artificial deflation mechanism.
Correct. If it's like out of a
Yeah.
treasury, I think to me, it's like you minted these tokens out of nowhere, and then you're just burning these tokens that you just minted. To me, like that, I do think that's kind of artificial, and it is kind of like smoke and mirrors, in my opinion. I see a use if you're, because you have to look at it like you're not going to, in a startup, you're not going to do stock buybacks early stage. That's crazy, because you want to reinvest. At a certain point, though, I could see a purpose for supporting token price and having some percentage of revenue going to open market buys potentially. But I don't think in early stages. I think it's probably pretty much a bad idea, really, because you're gonna cut off the growth of your project potentially.
Well, and look at Tyler's laughing. He failed.
Damn it, Cisco Cat, you caught me.
Look at Solana, right? Solana has the 15% mint, which is an inflationary effect, annual mint. But then they burn 50% of fees, which is a deflationary effect. And what they're basically banking on is that there's going to be sufficient transaction activity or volume on Solana to offset that 15% minting inflationary effect. So there's no wonder why Pump.fun was hugely successful on Solana. There were lots of mechanisms to make that possible, to create that much transaction volume. And you wonder why Solana's core principle is to support projects that can create volume. Like they go out of their way. So going back to our conversation earlier, Solana's done an incredible job enabling projects to create huge amounts of volume on their network, partially because of that deflationary mechanism. Like that's core to their survival. They didn't have, if they had Hedera's organic transaction volume right now, they'd be dead with all the inflation they're creating on that 15% mint. And so now everybody's going to have a release schedule, right? I mean, we've got Bitcoin has a freaking release schedule, and Hedera has a treasury they're releasing over time. So, and everybody hates that because it always increases circulating supply, which affects token price and all that fun stuff. But Solana very specifically has a mint and burn strategy, which, and on first blush, I would look at and be like, I don't like the feel of that because it's an artificial deflationary mechanism on the back end. But at the same time, they've done so well, they can do a lot of good now.
Yeah.
There are a lot of projects that have they've done some things that feel wrong to me on first blush, but then they make so much money, they can actually go and do good things.
Sure.
So.
Yeah, there's a lot of L1s that I don't really understand their valuations at all.
Yeah.
Frankly.
Like Cardano?
Well, don't get me started. Yeah, I have a campaign I might be starting soon that's like, y'all been doing blockchain wrong for 15 years. So that's going to be a big old hot take. I'm not sure that I feel that L1s are necessary beyond public settlement and signaling. Outside of that, like everything can be, we've got cryptography, we can do private settlement, we can do all kinds of things, private payments. We can do distributed private substrates, aka DePINs. We can do edge clustered workloads, aka mesh nets on Tashi. Like there's really not a lot that needs to happen beyond payment settlement and signaling on L1s and L2s. And I'm a little bit annoyed that we've tried to fit every other workload and use case on the L1s and L2s for so long.
Ken, Cisco Cat. I'm looking at Brad over here. He's got a hat on. Has a good question I think you should answer, which is Amazon can't keep their shit straight. So what makes you think it's a good idea to build any critical infrastructure on some random nodes?
I don't think that decentralized is the answer to anything that's supposed to be mission critical. Beyond the fact that you can have redundancy and failover. I think most mission critical things are going to end up in your own data center anyway. They should be. I think that's probably part of the equilibrium we're going through right now is people are realizing that cloud isn't as secure as it needs to be. And even in the article that I wrote earlier this week, I said, I don't see AWS or Azure or Google Cloud going away. What I see, because right now the answer that Amazon gave was, well, just don't depend on one region. That was their answer. So I'm like, oh, so you're just telling me to spend 2 or 3 times more with you, is what you're saying.
Of course.
So what I'm saying is, no, go ahead and host it on whatever region is most advantageous for your mission, and then have redundancy in the decentralized model. Have that as your backup and your redundancy. And maybe even adding optimizations. There are things that we can do at the edge that Amazon will never be able to do in their data centers. There's certain latency sensitive things we can do at the edge that Amazon can't do at their data centers. So I don't think it is a one or the other. It's definitely a hybrid strategy. And for super mission critical things, I wouldn't even host it at Amazon. I'd have it in a co-located data center anyway with an ISP, with my with my own backhaul into level 3 fiber. So it depends on how mission critical we're talking about, but I agree with the sentiment, by the way. I 100% agree with Cisco Cat's sentiment, right? But I think that what we're doing is we're living like cloud is old now. And we've discovered a ton of the vulnerabilities and inefficiencies. And what we're trying to do in Web3 is we're trying to expand the capabilities of all these latent resources to participate in some of these infrastructure plays, and also expand the business model in a way that previously was not really possible without a lot of this blockchain tokenization stuff. And so I think what I'm saying is we're adding features to the tech stack that are valuable to everybody down into their homes. I like the idea of consumers being able to participate in enterprise business models and not have to be an enterprise salesperson or an enterprise sysadmin. I like that idea. And all we're doing is activating latent assets for failover. Like even in our case, if you wanted to play a multiplayer game using Tashi's DePIN and you wanted to pull a resource node out as a relay because it has really low latency to your group who are playing this multiplayer game, I'm probably going to pull 2 or 3 resource nodes out, because if I have one acting as relay for the whole session, then that one node could just turn their computer off, or they could have a power outage, or they could decide they want to play a game, so they turn the node off. And now you're out a relay for the entire session. So you're going to have redundancy. I just think it's going to be cheaper redundancy than paying Amazon for that redundancy.
Ken, I think that was a really good answer to Cisco's original question. But while I was listening to you speak, one thing that I realized is there are certainly levels to this shit. You're talking about the way you're running co-located databases and level 3 fiber optic, just all this shit. And I'm like so out of the loop on how any of that shit. Not how it works as much as how being in the game. You know what I'm saying?
Well, post Cisco Cat's latest comment, not the.
Oh, the only thing that can be done at the edge.
The second to the left. Yeah.
Post
that one. This I love this comment here, because this is the skeptic in me. This is me right now for all of blockchain, right? This is how I feel of all the things we've been trying to do, you can do with a database and an API. So I get this resonates with my ethos.
Would you say it just like that, Ken? Would you say it just like that? The Mickey Mouse fuckery?
Yeah, I love it. I probably wouldn't say it just like that, but I love this. I love the underlying emotion here. No, I don't think everything has to be Mickey Mouse, even, because that implies that there's unnecessary functions that are happening. I will tell you right now that there are people in Indonesia trying to play a multiplayer game that have 150 millisecond ping, so they're having bad experiences playing their games just because the nearest data center to them is in the Philippines or Hong Kong. I will tell you that there are people who, because of proximity, are having degraded experiences in certain workloads, whether it's multiplayer gaming or stuff like that. And what I'm saying is, cool, let's just make the peers talk to each other, and we'll use consensus to synchronize the game state between them. And now they have whatever the latency is between the peers as 2.5 times the network latency is the latency of the game. So instead of having 150 to 200 milliseconds, or some cases 300 milliseconds of latency in a video game, you now have 25 to 50 milliseconds of latency for the video game. So that's what I mean, Cisco Cat, when I say that there are things you can do at the edge that you can't do at the data center. And by the way, that is a measurement that game developers are taking every day. They're going, how many data centers do I integrate my game with because I've got players in that region who are paying me for that game and they're getting a degraded experience. So they have to make a CapEx and an OpEx cost decision about how many servers are we running in which regions. And what we're saying is, why don't we just take that math off the table? If we do it in a decentralized model, you don't even have to have that math on the table. And we can give you a global fixed price, which is why we're resonating so well in the gaming space. And there are other use cases like that. I mean, search and rescue robotics. You can't even talk to the internet with freaking what is Starlink. When you're in a forest or in a canyon, you don't have reliable connectivity to Starlink to update your robots with commands for search and rescue or your drones. So you have to have some type of peer-to-peer mesh coordination happening, which is some of the stuff we're doing. So my point is, there are plenty of realistic, valuable use cases. That gaming use case, by the way, is taking gaming infrastructure from probably somewhere about 45 billion down to maybe 20 billion when we get out into market. So that gets a non-trivial change to the markets when it comes to gaming infrastructure. So I wouldn't say that it's Mickey Mouse at all. I just, maybe the sentiment that I have there is that I feel like in a lot of cases we try to plug every use case in the blockchain, and I have yet to see one that works really well on an L1. And to me, that would be Mickey Mouse. Anytime we were like, oh, look, we're doing logistics and supply chain management on an L1. And Cisco Cat wants to join us.
Ken, I do want to. You made me think of a comment that I heard from Nils not too long ago when you had mentioned search and rescue, and it's making me.
Guess where that idea came from. We're doing
Well, that's kind of what I wanted you to expand on a little bit. Last time we spoke to Nils, he was on his way to meet you, and I think that was in San Francisco or something like that.
Yeah.
Talk to me, like, curious, what was that meeting like? Was this about search and rescue? What were some of the interesting things you took away from that conversation, if you don't mind sharing?
Well, so let's be real. Like I am a software solutions architect, right? So I've heard just about every use case in the world, and I focus on solving problems with technology. That's kind of my special power. Now I will go research the heck out of an industry to figure out how to solve that problem. I am not an expert in robotics by any means. So we actually brought on an expert in robotics onto our team who's worked on robotics in massive industrial projects and even in consumer robotics. But I wanted to go talk to Nils. So that's where Nils and I had a conversation. I was like, dude, you've been living in robotics for a couple decades now, you and Alex. So I met with Nils and Alex and we chatted, and I was just like, where do you think this could go? What is the easiest POC we can do together? Like, I want to build all of the tooling for the robotics space that's actually useful to robotics engineers. I don't want to just build some token, wallet SDK that plugs into some robotics framework that nobody's ever going to use, like ROS2 or something like that. I was like, give me, what is something that we can build that's meaningful? And he was like, he gave me a few ideas, but one of them was the search and rescue idea. And we were talking about it. The idea is like, imagine a Sprinter van pulling up into a forest, being given the mission to go find a child based off their picture. You're going to use image recognition AI chips baked into the robot. The robots now have the ability to recognize this child using this AI image recognition chip. They have open communication between each other using things like WiMAX, LoRa, Bluetooth, all these different communication protocols. You basically drop these 6 robots off in the forest, and they just maintain communication with each other. They don't have to talk back to home. They don't have to talk to a central coordination server. They just run through the forest, and they do what I was calling scan, plan, and execute. They scan the environment and the situation. They plan the search mission, and then they execute on that mission until they get to the solution. And when they can get internet connectivity through, say, like a Starlink or a local Wi-Fi spot, or maybe even the Sprinter van that has a tower that gets Starlink and then acts as a hub for that communication. When they do get that connectivity, they can upload a proof of the entire mission. And by the way, they're all validating each other the whole time. So they're validating that each other's doing what they said they were going to do on the planning side, and updating the plan as the environment changes, because they're going to discover things like potholes and valleys and things that they didn't expect initially on the initial scan. And so there's all kinds of things that the robots can coordinate and discover and explore all by themselves without ever talking to a centralized server. And so that's kind of what we were doing, is we're saying, how do you take a bunch of robots, get them to coordinate in a consensus way, at sub 50 millisecond latency, so it's actually mission useful. And so, anyway, that's
Skynet made possible by Tashi.
That's right, Tashi plus Aoki, and then
Skynet.
we'll throw some GeoNet in there as well, because
you guys are just arming the next generation
we're gonna have an
Terminators.
RTK. Yeah, we're gonna have an RTK node on the Sprinter van too. So
hopefully they'll keep us alive. They'll be like, "Oh, we need you to maintenance the node, so we'll keep you alive." You guys.
That's right.
It just seems so cool that you could see the possibilities of what can be done when all of these networks start to kind of work together in their respective ways. I think this is a phenomenal
deep energy.
Yeah, deep energy.
Deep energy.
Shout out to Will, man. He's gonna make that. It sounds terrible, but it's gonna stick for sure. But
it's great. It's great because it's terrible. It's great because it's terrible.
But yeah, Ken, I'm sorry to pry. I was so curious. I think what they're doing over at Aoki is super cool. No way, Joe, my man. Joe.
I saw him join. I couldn't resist. I had to bring him in now.
Yeah, thanks for having me. Can you guys hear me all right?
Yeah.
Yeah.
Are you in a hotel room? You look like you're in a hotel room.
Yeah, I'm in a hotel room. I'm traveling. Have an event set up I have to do out here. Beautiful hotel. 4 seasons. 5 stars.
4 seasons, 5 stars, baby.
Yeah, is my audio okay?
Yeah, the audio's fine.
Good. No feedback?
Not yet.
All right.
But,
now, Ken, I have to say, I'm not just trying to dunk all over your project. I'm just a bit fatigued with DePIN in general, but specifically decentralized compute projects. So wherever you'd like to start, whatever topic, if you
I'm with you though. That's the thing, is like, without dunking on my own partners, like, don't get me started with like DePIN. No, I'm not going to say it.
And I have to say, I've tried to use probably about a half dozen of the top decentralized compute projects.
Yeah, I'm with you.
It has been a nightmare. Set up basic functions.
So you as a consumer are living on the API side of decentralized compute, which is the side that I don't think is meaningful. And I'm going to probably leave it at there before I start offending a bunch of my partners. But you're on the API side of a virtual decentralized cloud. I don't think the answer is let's move compute from data center clouds to consumer clouds. There might be a privacy argument there. There might be there's some things that, like with Conduit, you might be able to do with trusted execution environments but you can still do that with AWS, right? You can still use Nitro on AWS to get trusted execution environments. So there's a question about who controls storage and compute. And so there's a control question, which absolutely I think you can solve. But for the most part, the solutions are like for example, and forgive me, any AI aggregator for DePIN, what is something that I can do on decentralized AI I can't do on RunPod for less? And it's not really there, right? And I think that's been my challenge with a lot of these. We're changing the model. We're not saying, hey, let's go use other people's computers as servers. We're saying, no, let's make you the synchronized server in a multi-party workload. In gaming, it's really easy to visualize, right? In gaming, you've got multiple players. Your interest in completing the workload is you all want to play a game, right? There's no gas, there's no fees. It's just your compute allowing you to play a game, but we're using a consensus algorithm behind the scenes to validate each other's state transitions in the game. So we're keeping each other honest in the game state in a way that would be cost prohibitive potentially for centralized servers. And we see that right now. There are games shutting down all the time because they can't afford their infrastructure, or they can't expand to their audience the way their audience wants to. We're basically saying, let's bring back LANs, basically virtual LAN parties is what we're bringing back, but we're using consensus algorithms to do it. And that same model can be applied to other verticals. You can apply that to multi-master databases. You can apply that to multi-robotic coordination, where you say, no, let the robots coordinate between each other. We'll only talk to the servers, whether it's decentralized or cloud or data center, I don't care. But we'll let them talk to the servers when they get connectivity and when it's necessary. But the vast majority of the work that needs to get done can be done between the robots. Yeah, and that's what we're building, is that substrate under the hood.
Now, the one portion that always gets me on this is when I see the decentralized computes, and I don't understand. I haven't looked into Tashi, so perhaps this doesn't apply, but it seems that every decentralized compute project is forced into having nodes, the tier levels where they're deployed in data centers are at least on a business, business internet connection, business level, right?
Yeah.
Because otherwise it's there's there's a litany of reasons that it just doesn't work for the consumer. Right?
Well, and you're gonna have a backbone on a data center of 2 gigs minimum for every rack you have, right? So you've got this ability to communicate to the world at 2 gigs synchronous, so up and downstream. While in consumer space, you might have a gigabit internet down, but you're gonna have like 100 megs or maybe 300 megs if you're lucky up. You're not gonna have synchronous connectivity, which is part of the problem that you're articulating, right? That's part of the challenge, is that there are SLAs and higher bandwidth, synchronous bandwidth, when you're talking about data centers. What we're saying is most of the work can be done peer-to-peer. For anything that can't be done peer-to-peer, and an example of something that couldn't be done purely peer-to-peer is something like NAT hole punching, right? Hole punching through the NAT or the firewalls. Maybe you need to have a proxy relay. That is a low bandwidth function that pretty much any consumer backbone can support. And so that's what our DePIN is. Our DePIN is just like, what are the functions that can't be done strictly in this peer-to-peer that we can offload, like a short-term key value store for a gaming session can be done in a DePIN model.
What's the market for that? What's the, what do they call the target?
$45 billion.
TAM.
Yeah.
Oh, so the TAM is $45 billion. Our SOM is probably somewhere around 200 million. The serviceable address obtainable market is somewhere around 200 million. And I know that because I've talked with all the biggest game companies. We've been working with Unity, and Epic's a little more tricky, but Godot and Havoc, like the game engines, about this problem. And quite literally, one of our gaming partners, they've got $150 million expense, infrastructure expense. And we did an analysis with them and found out that 30% of that just goes to network egress. 30% of that cost is just outgoing data from their data centers to their game players. And we were like, what if we could cut that in half? And they were like, that changes our entire business. So we did the analysis on it, and we were like, if we were to say, instead of every time you have to do a game event, it has to phone home, what if the peers that are local to you could validate those low bandwidth, low compute costs, operates on 1 core and 32 megabytes of RAM? Like, what if we could do that locally? Even on phones can handle this. We've already done POCs on phones with this. And they were just like, yeah, if you could do that, that changes our entire business. It entires our entire growth strategy, because they're operating on 3 to 5% margins. And we're sitting there going, well, what if we turn that into 15, 20% margins? And they're like, holy crap. Yeah. So it's a significant, and I get where you're going. I think for me, the reason why gaming is so exciting is because it's an existing spend that we can have immediate impact on, that people can feel the value, and we can have like real impact on the growth of gaming companies. Now, the hardest part about that, the reality is that game companies are super risk averse. So it's like we have to have 100 games using our tech before the big guys will even take a look at us run on POC. So that's why we come to Web3, because Web3 is not risk averse. And we can go, hey, all you game devs who can't afford your servers, build on Tashi so you guys don't go out of business because you can't afford your servers, because you can't figure out your economics. But at least we can get 100 games proving the model.
That's fun. That's great.
It's point taken.
Yeah,
it's a sandbox. It's a bunch of crazy people doing crazy things
much of
all the time.
Yeah, but I have to imagine that much of that overhead is not just about traffic or hosting, but the additional features that come along with having that system in place. The security and anti-DDoS, load balancing, things that are not necessarily, number one, it takes a lot of resources to build that into your platform, and kind of hard to do in a decentralized manner. At least you won't have as much functionality or ability to have some of those functions as you would if it was all combined into one geolocation. one data center. So
I don't know. I mean, if you look at gaming, like look at Excel Byte, for example, right? So Excel Byte's going to have identity. They're going to have e-commerce. They're going to have stores. They're going to have profiles. They're going to have presence and chatting. Like the vast majority of those functions we can do through our DePIN. We can do real-time chat through our DePIN for either the same price or better price with the same performance that you're going to do in the data center. We're not going to do e-commerce because that's just not our model, right? We have to integrate with somebody to do the e-commerce side. Also, there are things like matchmaking, which are hard problems to solve, where we're partnering with Beamable to handle our matchmaking. And Beamable is a Web 2 game company that's now moving into Web 3. But to your point, a lot of that stuff happens in data centers. So, which I'm okay with. I think the answer is a hybrid approach, but a lot of those functions can be moved to a decentralized model. There are some functions that just can't, or the cost benefit's not there.
Don't let Daniel Keller hear you say that.
Wait, don't say his name. Don't say his name 3 times.
No, well, Daniel and I have some history, so
yeah, I can only imagine. Were you flamed by him?
He was probably we flamed each other.
It was a great conversation, honestly. That conversation was probably one of my favorite spaces I've been on in quite a while. So
I'm sad I missed it.
Yeah, you might have to send him the link to that one because it got pretty heated. It was exciting.
It was perfect because I think I was in Las Vegas for it too. So like the Las Vegas heat was hitting me, and the heat from the space was like exuding, and I was like, this is just like so perfect.
Yeah.
Yeah, but I assume
your sentiment,
what I'm getting at here, and part of the reason for hosting it at a data center with and a lot of the overhead that comes with it is for example, services that you may purchase from the ISP, particularly like that, the inbound traffic filtering, for example, anti-denial of service protection, or that redundancy. And I understand it can be done on the edge, or even if you're doing it on like a business circuit out of, let's say, an enterprise office that's downtown. It's not a data center, but you still have that multi-gigabit connection. It's still not giving you that same level of redundancy, perhaps, and that for many network architects, that doesn't sit well, and that's always been So I understand it's absorbing part of the market that they need that alternative that is more cost effective, but I haven't seen it yet, and I'm not sure it's enough to I'm not sure. Go ahead.
Yeah. I mean, so the redundancy I'm less worried about, right? Because I can always run 2 relays regionally close by. I can pick 2 consumer devices nearby and say, okay, you guys are going to play relay proxy or proxy relay for this game session. And if one of you starts failing or injecting latency or doing something bad, I'm just going to drop that one, continue with the other one, and then bring in another one and have it ready to go as standby. And so we're talking milliseconds of latency, maybe 150 to 200 milliseconds of latency for us to detect that there's an anomaly, and maybe another second to reshuffle everything. So in gaming, we get that all the time. It's called lag. We get lag spike all the time. We have all types of anomalies in games, and most workloads are okay with that. Now, the other one that you brought up that I think is probably more interesting to me is like deep packet inspection or any of those like packet inspection, SPI, DPI type stuff. Yeah. Which is more about detecting bad actors at the packet level before it even gets processed on the compute level, right? And that's something you're just not going to get at a consumer level, period.
Oh, no, you would need your own firewall for that. But even, if you were to go to, like, say, Lumen, they would have some sort of, they have massive, I don't know if you'd actually call them like firewalls per se, but they have some sort of device there that, is looking specifically for those traffic anomalies and protecting against that. And that's essentially what you're also getting in any data center, or even AWS, Azure. And let me be clear, I'm not necessarily a fan of cloud deployments, but you get what I'm saying here. So
let's think about that. Let's think about the model though. The reason why those things are more important in a data center is because data centers can be the target of DDoSes because they have static IP addresses. Once you discover the static IP address, you've got a target.
But anything connected to the web can be
you can target any IP address. You can target any IP address, but the question is, how do you target a moving target? This is the whole reason why we have proof of work algorithms, is to select the next random block producer, right? So the idea is you want to create enough randomness that you can't predict who the next block producer is. Otherwise, you can
it, but you have to advertise that to everyone who's participating, and that's enough to advertise it to the attacker, right?
Well, and like Algorand, right? They got their verifiable random functions, right? So they do it in a way where like they produce the block before we know who is the block winner, right? As opposed to Bitcoin, which is different. You publish it to everybody before you even select it. But even like Hashgraph, right? The voting algorithm, there is no leader selection. And what you're saying is that anytime there's a leader selected, you've got a target for DDoS. And what I'm saying is the way we built our protocol is leaderless, which, by the way, there's like on one hand, the number of protocols out there that have leaderless consensus algorithms.
Essentially, the leader who is determining the end result is relaying that result through relay.
And we're leaderless, so we don't. It's a voting algorithm for us. So you can have anywhere from 4 to 64 nodes that we've tested reliably in any session, in any like micro Hive cluster session. And it requires 2/3 of them to participate to calculate the state of whatever the system is, whether it's a network system or a game system or a robotic system. It requires 2/3 of them to even calculate the order of the messages. That means you can have 1/3 of them compromised, up to 1/3 of them compromised. So you could DDoS up to 1/3 of them, and the entire system still continues to run. Now, those 1/3 are going to be affected because they're getting DDoSed, but at least the system continues to operate. And so,
but for whatever application that's being deployed on this system, do they have to change the architecture or have some sort of specialized integration to fit that, this mechanism that is basically what Tashi has built?
Yeah, that's a great question. I think it depends on the use case. So in gaming, we built an SDK that plugs into Unity, and it talks in the network manager language that everybody who builds on Unity knows very well. So we're talking the language that they're expecting. And here's the funny part about the DePIN. We talk about all this decentralization, but we built a gateway that is very centralized, that is used to take in Stripe payments, issue you an API key, and allow you to access the resources on the DePIN network, the orchestrators via the gateway. So you as a game developer, you could take our SDK, you could go to our gateway, pay with the Stripe credit card, get an API key, put the API key into your SDK like you would any other gaming network manager SDK. And now you're building a multiplayer game, and you have no idea that there's a bunch of decentralized infrastructure behind the scenes. All you know is you built this SDK, and it's handling a lot of the stuff for you in the backend. Now, that being said, anybody can build a gateway on Tashi. We built a gateway for gaming because we're building the SDKs for gaming. But if you wanted to come in and build a competing gaming SDK or gateway, you could. Or you could just say, screw gateways. If you pay in crypto, you can just use the entire system without talking to Stripe and without taking credit card payments. The reality is like there's business in taking credit cards. That's where the $45 billion is in Web2 game developers.
Well, I would assume that would be the majority of the business. Right?
That's the vast majority of the business is that
99.9999.
There we go. Yeah,
even as a crypto dude, I would still use my credit card if I'm trying to deploy this stuff.
That's right.
Yeah.
That's exactly why we take this gateway approach. Is like the gateway is the Web 2 gateway into a Web 3 interface, and it treats the crypto part as a cost of goods sold. So so you pay us in USD, and then I go and deal with all the crypto stuff that has to happen to provision this resource for you. And so, but if you're savvy enough and you don't like using centralized gateways, which maybe some games are that way, then yeah, go ahead and build whatever gateway you want on top of Tashi and use it with crypto directly, and it's fully decentralized at that point. But that's not our Tashi Labs, the Singapore company, the IP holding company. That's our primary business. This is why we can give Tashi away for free, is because we're going to make all our money in the gateway. Like
boom, mic drop.
Even the token, it's like, yeah, we have skin in the game because of the token, but we're building a business here so that the people who participate in the token economics are incentivized to keep this network going and keep the token stake to secure the network, because the token staking is a reputation multiplier for the selection algorithm with diminishing returns, by the way. So
yeah, I know. I know I made a comment about, people dumping on the stakers, but I fully agree that any node that requires uptime probably should require staking as well, right?
Yep.
Like otherwise, that's the only way to hold people's feet to the fire to make sure that stays online.
Well, and there's two parts of that, right? So there's the reputation, and we actually came up with our own fun little algorithm that is it is 0 to 2 is the reputation. Everybody starts with a 1 reputation. Every time you complete a job, it moves you toward 2, and every time you fail to complete a job, it moves you closer down to 0. And as long as you're above 1 in your reputation, there's no slashing that happens to your stake. And so the expectation is that most people are going to be successfully completing jobs because they're relatively short jobs, right? They're seconds, if not a few minutes max, right, for a game session. So you're completing jobs and your reputation is going positive. And so if you're staking, you're earning the stake is also a multiplier against your reward too. So the more you stake, the more you get rewarded, and the more likely you are to get selected for a job. And if somebody else stakes to you, the more likely you are to succeed. If you keep your machine up and running, the more you're likely you are to earn. But what if you don't care about earning? What if you're just playing a game and your developer of your game says, hey, I will give you in-game rewards if you just leave the launcher for our game up and running, and they'll have a little counter saying, you're helping us help other people play this game, and you're going to get rewarded with in-game tokens. Now the developer has a new revenue stream. And so there's but like Blizzard has 10 million machines online at any given time. They're not going to stake $10 per machine. They're not going to put 100 million in stake up. There's no way Blizzard's going to put that kind of money up, lock that kind of money up for a crypto scheme, right?
Mm-hmm.
But there are plenty of people who are going to own Tashi who want to stake against Blizzard. And so the hope is that, okay, if Blizzard wants to activate those nodes and generate a new revenue stream, incentivize Tashi holders to stake to them. And so I'm kind of going into some of the tokenomics that really haven't been published yet that we're still doing a lot of the simulations on. But the idea is that you've got people who own machines that don't care about crypto. You have people who have access to the machines of the people who own the machines who want another revenue stream, but don't have the crypto to stake. And then you have people who have crypto who don't own machines and don't care about machines. And then there are people who are all of those things. There are people who have the token and have the machines and care about crypto, which is your operators like William. But operators are going to be such a small fraction over the long run, but they're going to be the big piece in the first few years. In the long run, I expect people to embed Tashi node software into all kinds of applications that people permissively opt into and say, yeah, I'll get rewarded in whatever ecosystem I'm in, but that becomes a new revenue stream for the developer.
Okay. No, honestly, this. Sorry, go ahead, Joe.
If you had something to say, go ahead. I've been talking the whole time.
I know. Brad and I are reaching a point where we're about to pass out. I feel like, but it's been a long day.
It's late.
It's been a very, very long day. But no, this has been a really good conversation. I honestly want to keep this going for next time. So Joe and Ken, you guys are more than welcome to come back on next time for sure. Right. But I guess wrapping this whole thing up, we can kind of go through some final takes maybe. So I guess Joe and Ken, if you guys want to maybe have some final takes here, and then I'll throw it to Brad and then myself. I know Quez and Tyler had to go earlier. They had things to attend to. So, but yeah, I'll go throw the mic to Joe first. Then we'll go Ken, Brad, myself.
I appreciate you guys bringing me on, and Ken, thanks for answering the questions. Your answers were more coherent than most of the competition. So, it's. I wish you the best of luck, and I'll look into it more. I just seen enough to be very. At least you're given, substantive answers and not pie in the sky bullshit that we've heard repeatedly.
Decentralized, Joe. It's decentralized.
Yeah.
Jazz hands. It's decentralized.
It's decentralized. Ken's a real one.
Well, and the thing, so I was one of the founding employees and chief developer advocate for Hedera for 3.5 years. So,
well, that would make a lot of sense because I find them to be a serious project.
Yeah, when I spent
it's not really, it's not been near. They've not come when it comes to, I guess, consumer or
the retail side.
Yeah, success. It's nowhere where we would have thought it would have been by this point, right?
Oh yeah. Well, and my job early on was doing all the technical due diligence for all the council members. So I was meeting up with Boeing and IBM and Google and Shinhan Bank and LG Electronics and helping them discover like what is their use case. So I've seen just about every enterprise use case out there. I remember going into Boeing and them having 3 use cases, and the first time I sat down, I'm like, why aren't you using a database and an API for that one? And why don't you do federated identity for that one? And why don't you do? So I like shot down all 3 of their use cases. Like, I think we need to do a workshop so you guys understand the value proposition of decentralization. And we need to find a real use case where it's valuable. And so that was kind of my job, was like to really help people discover what are real use cases at an enterprise level. And then when I left, I spent a year externally kind of working on my own projects and stuff. But then when I started Tashi with my partner in Singapore, I was just like, well, we've got this consensus algorithm. You can actually do some things with it. And I've built multiple businesses before. I mean, I built a 8-figure boutique SI company. So like, I know how to build companies and I know how to generate revenue. And I was just like, why don't we go do something real here? Let's go build a real business with this technology. And so that was the premise of like, if there's no revenue there, if there's no TAM, if there's no market to go after, what the heck are we doing? Like, if we have to go invent the market,
you're creating the market, Ken.
Yeah. Well, once everybody realizes how valuable decentralized identity is, they'll all swarm over, right? And they'll start paying us for it. No, I was not going to go in and invent a market. I wanted to go into markets that existed and go to where the developers were.
Yeah. No, very well said. Very well said, guys. Brad, I guess I'll throw it to you, man. What have your thoughts been, man? It's been a wild week, dude.
Yeah, I got nothing, man. Great conversation, guys. And thanks for everyone that's been
Brad's like,
tuning
I want to
in.
go to sleep desperately.
I'm done.
Yeah, he's like, I can't wait. I'm looking at my bed right now. My goodness. No, it's been an amazing conversation, really. No, I just want to thank Joe and Ken for coming on again. Guys, definitely, if you're not following Joe or Ken, be sure to do so. Love having them on.
Where would you follow me at?
You're on YouTube. I see your YouTube channel. Cisco Cat right there, dude.
Follow
Cisco Cat.
I'm not a YouTuber anymore.
Who cares? Follow him. He's a critic, guys. He's got good takes. Follow his lead on things. All right. We need your nose. We need your eyes, Joe. All right. So I'm just gonna say it again. Follow Joe. Follow Ken. Follow Brad. If you're not already. But no, seriously, thank you guys so much for coming. Thank you, Deep Network, for sponsoring the show. Definitely check them out, guys. We'll be live again Thursday, 8 p.m. Eastern next week. So check us out then. Everyone, good night. Enjoy